All right, everything looking good. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is Wednesday at 8 p.m. Eastern Standard Time, and today we're going to take a look at our traditional markets, stock markets, and of course our commodities as well as cryptocurrency. So if you just let me know in the chat, everything is coming through loud and clear. Got a nice picture and good sound. Everything looks good on my end, and we'll jump right in. But before we do, I would like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. You may have noticed that the title of this stream is Bitcoin has bottomed, and we will be discussing that shortly as well. But before we do, we're actually going to do cryptos first today. But we're going to take a look at the 10-year treasury and see what's going on over here. We are still just hanging out right on that support level. Typically, the longer we test a support level for, the more likely it is to break. So we'll have to see. While this takes place, though, we are paying attention to essentially our indicator oscillators are trending downwards. So in many cases, you could refer to this as a bullish reset. So just switching over to our weekly time frame, we can see here, this is obviously a bearish looking chart. We have the sell signal, the buy signal, the sell signal. We have exited the bullish control zone, and now we have a bunch of red histograms in a row. But we are at an area where I would expect to see a bounce. Typically, when the histogram sells off like this and comes into contact with our slope line, we'll see like a reaction rally, a dead cat bounce. So we'll have to see what happens there. Oftentimes what will happen also is it will actually bounce up higher, and then we'll put in bearish divergence. So we'll put in a new high here, we'll put in a lower high right here and a lower high right here, and then we will sell off with like a violent move. So that is what I'm paying attention to and potentially expecting. Here we can see essentially like the inverse signal. What I was saying here is there's a bunch of red histograms in a row. We're above the slope line. When we hit the slope line, we would expect to see a bounce, like a rejection of that slope line, and then often we'll see continuation in the direction of the trend. So this would continue down. Here we saw the opposite. We were below the slope line, and the slope line was blue. We came up to it, and we basically got rejected, and then went back down underneath it. So we'll pay attention, but we'll often see at least some kind of a reaction at that area. And if we just look at this at the weekly, just a quick glance, we were in a long trending move to the upside. It is possible that this bounces here and continues to trend to the upside, in which case this would be basically a bullish reset on the weekly. But at this point in time, this many weeks in a row and a hard sell signal coming out of the bullish control zone, it looks more likely than not that we'll see further downside. And if we just switch real quick to the monthly, once again, you can see we're bouncing off a very key Fibonacci support level. What we have here potentially developing is, and we see a lot of these all over the markets right now, is we have basically a left shoulder here, and then our neckline formed here, and then we have our head here, and then we have a neckline touch right here, and then we have essentially like a right shoulder here. So if this does bounce back to the upside, what we'd be paying attention to is, does it bounce to an area that would correspond to like our existing neckline? And then if it breaks through there, it would look extremely bullish. If it gets rejected there, it would look like basically a failed breakout. But just to kind of like slap this on the chart real quick so we can see kind of what we're looking at, a little more accurately. We have basically our shoulder here. That's our neckline. And then depending if you're going by like, obviously like candle closes or the wicks, we have basically or are potentially putting in that right shoulder now. So if we bounce this area here, come back up, get rejected at the neckline, and then we see the head form, and then we come back up, we have a sloped neckline here, which is fine. It's a little less reliable just because it's not as symmetrical. But now here we have come down to that same Fibonacci level, the 618, and now here we have potential to bounce that area. We've just been kind of hanging around there for like 3 weeks while we sold off. Now here on the monthly, it looks more realistic that this could happen because we have the hard buy signal coming out of the bottom of the range, a bunch of green histograms in a row, and we have crossed over the red slope line. So the monthly gives us the idea that we may potentially get this move. And if we do get that move, you know, which is like contrary to basically what everyone is saying, you know, in the markets right now, what we do is we take from the head to the neckline here, and then we use that as our measured move. And you'll notice, depending when we get that move, the break of that neckline here, we would expect that move, that measured move, to take us to, you know, the distance, which would essentially be the top of the range up here. So if we did get that move, it would correspond with what is likely to happen in the situation, as we've been operating inside of this basically like broadening pattern. And typically what's happened is we've bounced like the bottom to the top to the bottom, you know, over and over again from the bottom to the top. So it would not be unrealistic at this point in time to think that we could potentially get that move back to the top, and then this would top out somewhere around like the 2.5% range, at which point in time, you know, there would be like extreme measures taking place to stop this from going higher, as you know, interest rates going above 2.5% would basically be like, you know, end game scenario. So not saying it's not possible, but you know, it's going to make paying back any debt anywhere in the world extremely difficult. Now, obviously, this is the 10-year Treasury, not like the overall like Fed fund rate, so it is a little bit different. But you know, typically you would expect those two things to move in the same direction or stay within a certain percentage of each other. So while I'm not saying that this is the most likely scenario that we break to the upside, there is still definitely a possibility that we will find support here and we'll see this head and shoulders play out. So but it's always worth paying attention to. And then you'll see here, if we just kind of zoom back out and look, so on the monthly, this looks extremely bullish and like there's potential for that to happen. On the weekly, it looks less likely. On the daily, it looks like there's definitely potential, as again, we're back down at the bottom of the range. So we have basically our daily and our monthly look slightly more bullish, and our weekly looks slightly more bearish. So, and then if we do break down from here, what I would expect to happen, you know, is essentially us to come down to that 0.5 range for the Fibonacci, or our 0.382. And then you'll also see, obviously, we have our red Fibonacci's in place. We would expect them to be like interacted with on longer time frames as opposed to short time frames, just because typically, you know, the shorter Fibonacci level will correspond typically with the shorter time frames. So this is just the yellow Fibonacci's from back here in October of 2018, as where if we look at like the big picture, the red Fibonacci goes back to, you know, our top back in 1981. So while we would expect it to still interact with that fib, the yellow would expect to be like much more shorter time frame, like clear interactions. So but there we have, you know, basically both case scenarios and an argument for the bullish and the bearish scenario as well, for the 10-year Treasury and what I'm potentially expecting there. And then if we just look at the DXY, we will notice here, you know, we had basically the first push up here, we did get above on the daily, above that 200 exponential and simple moving average. And then the second push here, we got back above them again, and we have started to level them out. And then when we actually came down this time, the initial push up here, we gapped down and then immediately lost the 200 simple. You know, basically like never even were able to close that little gap left behind. Here we have bounced up, and then we immediately bounced the 200 simple rather. So we'll have to see which direction we get follow through in. But based on the daily here, we're inside of the bullish control zone, you know, which would be the area we would expect. Like obviously the bulls are very clearly in control. That's what the bullish control zone represents. It represents that the stochastics are operating above the 80 line. Like, so your neutral zone is from 20 to 80. Absolute neutral would be like right smack in the middle. And then obviously like anything above 80, the area highlights in red here, and it shows the bulls are like very clearly in control, and anything below 20 is going to show that the bears are very clearly in control. And often when you leave that zone, you can see a powerful move in that direction. So here we are very clearly a bunch of green histograms in a row and very clear blue slope line, and then we're operating inside of the bullish control zone. So we are in between the moving averages right now, but they are leveling out. So on our daily, the DXY looks bullish. It overall looks bullish. And then, you know, if we zoom out a little bit too, we'll see we had like a macro low here, and then we have a higher low here. So that once again is a bullish situation. And then we can look for divergence taking place, which here we have a low, and then here we have a higher low. So if you're just looking at those 2 points, we're not seeing any divergence taking place at the moment. So, you know, we're seeing convergence on our daily time frame between the price action and indicator oscillators. And now here we can get a little bit broader of a picture. Looking at the weekly, you know, we are very clearly below the 528 moving average right now, trying to get above it. We basically got rejected at that white moving average. The previous time when we came up, we got rejected at the 377. So if we get rejected here at a lower high, it's going to look like we're going to sell back off aggressively to the downside. But once again here, if we pay attention, you know, we have essentially put in bullish divergence between our 3 points here as well. It's not really like as strong or like as clear cut here, as we basically have the same low. This one is actually slightly higher, but if we look at in relation to the amount of energy it took on our oscillator, like the TJD TDMACD, you'll see here we came down all the way to like the negative 1.25 level. Here we're all the way up at like the negative 0.45 level. So we would expect typically, if we were seeing convergence between the indicator and the actual price action, that they would be very close here on, you know, the indicator as well, as where there's a clear large gap in between the two of them here. So it took a ton of energy to get down here to this level, and then here it took very little energy to get back to the same level. So we know that that is typically an unsustainable move in the trend, and we would expect like the you know, basically reverse to take place, so the bullish divergence to push the price action to the upside, which you could say we already saw, and that was it, and it's going to top out and it's done. But we'll have to wait and see, do we get follow through now, because we have multiple green histograms on the weekly. You know, we have exited the bearish control zone and we are angled to the upside, and now here we have the blue slope line taking place from, you know, below the zero level, which is typically where long trending moves take place, like this last one back here from 2018. So again, we'll have to see what happens here, but this to me looks like a potential double bottom, you know, a W pattern forming right here. And what we'll pay attention to is similar to like our head and shoulders pattern. You know, we have two V's next to each other, and if we come back up to that same level where the two V's touch each other at 93, if we can get above that very clear resistance there, we would expect once again the measure move to take place. And the measure move again would be from one of our bottoms down here at like about 90 to our top right here about 93. So we would expect another 3-point move. So if we're at like 93, we would expect it to move up to roughly 96. So that would take us like roughly up into like the area up here, clearly above our 200 exponential and simple moving averages. And here on the weekly, we notice that the exponential and simple moving averages have basically a flat slope right now. You still see a slight slope to the downside on the 200 exponential, but the 200 simple is basically flat at this point. So if we do get back above those, it's going to look extremely bullish for a continuation to the upside. But again, we'll have to wait and see. So here on the weekly, we're looking pretty bullish. On the daily, we're looking pretty bullish. And then if we switch over to the monthly and see how does that look, on the monthly here, we have basically been in a negative slope like downtrend for quite some time while we went sideways, which essentially is a bullish reset taking place, or like you know, sideways action while the indicator oscillator like trends down. So we're basically resetting the indicator so we can then have like a strong move in the direction of the predominant trend, which in this case on this time frame is to the upside. So again, we bounced the first time when we came down off the 200 exponential and simple on the monthly here. You know, we never closed below the exponential. Here we have closed below the exponential, so that's actually slightly worse, but we didn't get down to the 200 simple. So if we can get continuation back to the upside from this area, you know, it's going to look extremely bullish. If we do break down from this area, you know, it would look like obviously a lower low, and that would look bearish. But as far as right now, how we're looking at this, how I'm looking at this and what I'm paying attention to is, you know, depending on how you break down this price action, going back to like 2008, we have a very clear low right here where the dollar bottomed out. And then if you look at it as little moves right here, there's a lot of noise in it because we have like a low, then a high, then a higher low, then we have a lower high, then we have a lower low. So that can cause confusion where people think, okay, so we have a low right here, and then we have a lower low, we're in a downtrend. We have a high right here, then we have a lower high, we're in a downtrend. But in all actuality, what we're paying attention to is we're basically ignoring the inside move because this is like an inside retracement. We have a low right here, and when we came down, we did not take out that low. So we have a low, then we have a higher low. And then we have a high right here, and then we later took out that high over here. So we have a low, then we have a high, then we have a higher low, then we have a higher high, then we have a higher low, then we have a lower high. So what we're paying attention to now is what happens in this area. because two things can happen. We can come down here and put in a higher low and then get continuation and put in a higher high, or we could do what we did back here. We could come all the way back up and put in a lower high once again and then continue down lower. But as long as we don't take out the previous substantial low, we're still in an uptrend. So here we have a low, then we have a high, then we have a higher low, then we have a higher high. So that's very clearly an uptrend. What we're paying attention to is, now that we have put in this low, when we come down with this low, are we going to keep going down here? Because if we take out potentially this low right here, it's going to look extremely, extremely bad. If we take out this low right here, it's definitely going to look bad. But the most important thing is, do we take out this low or do we take out this high next? Because that's going to determine which like continuation we're expecting in this trend. And then if you start drawing in like trend lines, etc., you can start getting an idea as to the actual price action. But typically the way I look at it is, the direction of the trend is based on our 200 exponential and simple moving averages. So very clearly back here, we have our 200 exponential and simple moving averages. Price action stayed below them from 2003 until 2015. So we had a 12-year downtrend. The whole time price action was underneath those two moving averages. And then once we broke above them right here, we weren't quite in an uptrend yet because we still had a negative slope on the 200 simple moving average, even though the 200 exponential was already angled back to the upside. So now here we're in a situation where we are actually above on the monthly the 200 exponential moving average and the 200 simple moving average. And very slightly you can tell we actually have an upward slope on the 200 simple and we have an upward slope on the 200 exponential. So closing this monthly in 7 days above our 200 exponential moving average is going to now, for the first time basically since, you know, this chart goes back to 1986, and because of the amount of time it takes to populate a 200 moving average, it takes 200 months before it can even start drawing this first line right here. So from this entire chart, what we're looking at, we never had a situation ever on this entire chart before where we had the 200 exponential and 200 simple moving averages with a slope to the upside. So if that doesn't tell you that the dollar is strengthening in relation to like the euro and the pound and all the other currencies in this basket, if that doesn't tell you that, I don't know what does, because that's how I determine a bull trend, an uptrend, a powerful market, and expect continuation. So, you know, essentially here when we retested it, we still had the slope to the downside here. You could argue that this point right here is where we basically broke. And then typically what will happen is you will come down, the market will attempt to retest that and see, is this trend for real? Do we find support when we come back down to the 200 exponential or 200 simple, or does it break and then we get continuation in that direction? So at this point in time, this looks like a retest and then confirmation. And typically this area right here, when we get that retest, when we flip over the 200 exponential or 200 simple in whichever direction the price action goes from there, that is the best time to enter into a trend, like a long-term trending trade in that market, depending on what time frame you're looking at. But that's how I really like to determine a long-term bull trend for like basically an investment. So in a world full of people that are extremely bearish on the dollar right now, this to me looks extremely bullish, or at least the potential for an extremely, extremely bullish thing to take place. Something that has not happened in the last 40 something years and has never happened on this chart because of the time frame. So now what we're paying attention to also here is, we were talking about divergence earlier. We have two key points on this chart we're looking at. Obviously, we're in the bearish control zone in green right here. We're in the bearish control zone in green right here. We're looking at this low right here, which is at 11.4 or 11.3 roughly. And then we're looking at this low right here, which is at 9.3. So this is very clearly a lower low than this is right here. So now let's switch back. So we have a low right here, and then we have very clearly so far a higher low right here. And this bullish engulfing candle right here gives me hope or ambition, or makes me think that there's definitely potential that we'll see continuation to the upside. So if we now have 2 points on our chart, let's look at the TJD, TDMACD as well. We have a low right here, and then we very clearly have like the same low. It's like slightly lower, but you could just argue, let's just say for simplicity purposes, it's the same low. So here we have a low right here, and then we have a higher low, and here we have a low, and then we have the same low. So again, that's bullish divergence on a monthly chart above the 200 exponential and simple moving average. So we now have on the DXY, the daily, the weekly, and the monthly are all bullish, in my opinion. So We'll again have to see what happens in the next week right here. It could all be invalidated if we just get a horrible bearish sell-off and, you know, we end up curving these moving averages back down to the downside, and this was just a failed attempt, and then we break down from essentially what's going to look like a long-term double top, because we have like a support right here and a support right here, the same as we just looked at that double bottom on the shorter time frame right here. We could very easily have a top right here, a neckline, a top right here, and then a break of the neckline, at which point in time we would expect like serious continuation to the downside. So while either one is a possibility right now, we are down at areas holding a key support, and you'll see we had basically a resistance here, resistance here, resistance here, and then we came down and it was support here, and now it's acting as support again. So this is a very strong, very crucial area that we're at. So whatever move happens from this area, you know, the longer time that goes by afterwards, the more confirmation we're getting that that trend is going to be like the predominant trend that lasts for years and years and years. So on a chart that has only gone down essentially, because we have a high, a low, a lower high, and then a lower low, and now here we have, you know, essentially an internal retracement of that wave down right here. You know, if we start to push back up to the upside here, we could potentially be looking at, you know, a chart of the dollar that for the first time ever in existence could look like bullish based on those, you know, those specific criteria. So while everyone else, you know, and I don't like always being a contrarian or whatever, but I do sometimes just like thinking outside the box, because everybody tends to think the same way. Everybody tends to just regurgitate what they hear, and then typically everybody or the majority of people end up being wrong. So I'm going to jump over in the comments real quick and say what's up to you guys, and then we're going to jump into crypto after that. So good to see you, Bubblies. All right, appreciate that, my man. Sean CZ, good to see you, man. What's up? What's up? Our Kit says, hope everyone is doing well. I'm doing extremely well. Our Kits, I hope you are as well. Hopefully K Ritz will join us a little later. I'm sure we'll have a little slip up. And then Sean CZ says, crypto trend trader on equals bottle of wine and couch. There you go, my dude. That's right. Hitting that bottle. Don't hit it too hard, though, man. Got to make sure to retain this knowledge. Dropping bombs in the chat. Okay, so Bitcoin. Let's look at Bitcoin here, because we did some interesting things over the last couple days, and there's a lot of different ways that you could argue those things took place. So once again, like always, I want to look at it from both sides. I want to look at the bullish scenario. I want to look at the bearish scenario. And then I'm going to give you my opinion on what I think is most likely taking place, what's most likely to take place, and then also what I'm doing based on that situation. So full disclosure, I am long currently. I don't know how long I will stay long, but we will wait and see. Also, don't let this sway your judgment, but Michael Saylor is also long as well. So me and Michael Saylor finally agree on something. Okay, so here we've got basically based on this price action here, where did we start getting extremely skeptical on this chart? Okay, we got the breakdown back here. That was when the 8 and 21 crossed back to the downside. Why is that key? On the daily chart, that's what I like to base, you know, essentially like the micro move on what's potentially taking place. So when the 8 and 21 crossed down here, that was the first time that cross took place since way back over here. So we had one other scenario back in September of 2020 when we had the head and shoulders played out and it broke down from there. The 8 and 21 crossed to the downside. On futures, once we cross back to the upside right here at $10,775, we never broke back down and crossed that 821 back to the downside. We had a couple close calls, but because of only weekly price action, like we, you know, futures obviously is not open during the weekend. We had some false signals on our like traditional spot markets, but we never had that situation take place. This whole entire move, we were bullish the whole way up. I started getting bearish up here based on Fibonacci extensions, and then also based on the cross right here. And you guys know obviously that I sold into the market between basically 64,000 and 55,000. Since then, I have not been particularly bullish on longer time frames. So let me tell you why I took a scalp trade and why I'm potentially bullish through this area here. So now, obviously, I have the TJD TDMACD on right here. It is similar to the traditional MACD, but what it does is it tries to tell you like longer term trends and like eliminate some of the noise. I also use like a lot different of settings. If you want to use those same settings, you can go download it for free on TradingView. Feel free to use it. If you want to find out why I use those settings, I'm more than willing to discuss it, but I'm not going to get into like the whole long and short of it now. But essentially the idea is to catch long trending moves. And you'll see, obviously, whenever it flips blue, you typically have a pretty nice trending move in that direction. Whenever it flips red, you typically have, a trending move in that direction. So, you could see based on the TJD, TDMACD, we're long through this area, short through this area, long through this area, short through this area, long through this area, short through this area, long this whole entire bull run up, and then potentially getting short at the top, potentially getting long for that last little tip right there, and then again getting short. So now what has taken place, and again, you don't typically just use one indicator or one oscillator. I really like to use these three in conjunction together. So if we use the TJD, TDMACD, that's our Traders Dynamic MACD, my version of it, and then that's going to help us get into long trending trades. We use our moving average crosses. The 8 and 21 are the most important, and then also the slope and relation of price action to the 200 exponential and simple moving averages. Obviously being above them and having a slope to the upside is extremely bullish. Being below them and having a slope to the downside is extremely bearish. And then finally we have our version of the Joule, depending which one you're going to use. This one is the Joule Thief. This one uses two key things, obviously stochastics, and then inside of the stochastics as well, let me make this bigger for a second, we have essentially the knife. The knife is a proprietary indicator that I have created. It's a long story short. Essentially what it does is helps to tell you on like shorter time frames when like potential moves are bottoming out or topping out. So the signature you'd like to see on this, there's two key components to it. Obviously the actual line itself and the sharpness of the move. So when we see like a sharp move to the downside like this, that's obviously like not necessarily the exact bottom, but we're getting close to the bottom, and we're paying attention to divergence between like tips. And then here we have the green move to the upside, very clear, sharp, aggressive move like that. And then again, we're paying attention to like the sharpness of the move, but then also like divergence between other tips. So a lot of times what you'll see is the knife will come and top out right here. It will come down and then it will stab back up again. And then you will see a divergence between those 2 points. So we will see a massive, like aggressive move to the upside. And then we will see price action actually will continue to the upside and put in a new high, but the knife itself will not put in a new high. So what we're looking, and I'm not sure if that was the exact situation here. We can look. This was our high right here. And then right afterwards, we put in a second high on the knife, but it was the same high on price action. So that's like a micro bearish divergence. And then afterwards we sell off, and conveniently that was like the exact top of the market. So we can be very clear that that actually works. And then again, here on the bottom, we're going to look at the same thing. Here we have that poke right here, that initial poke of the knife, and then it bounces back up, and then it comes down here again, a second stab down, and then that was like our bottom temporarily on the market right there, at which point in time we started moving back to the upside. So that's just like a little extra something inside of it. But the idea is that using the moving averages, price action relation to the moving averages, the Traders Dynamic MACD, and then also our stochastics with additional other things in place as well, such as the knife, such as our binary pivots, such as the support and resistance. We can basically like have other things that just looking at one time frame, just looking at one chart, we can kind of break everything down and turn it into like simple yes no scenarios. Like, is this indicator bullish? Yes. Is this indicator bearish? No. Whatever the situation is. So, and then inside of each of those indicators, there's obviously a bunch of other things taking place as well. So now that you have like more of an idea how I use these things together, let's look at what's going on the Traders Dynamic MACD here that make me think that this is a potentially bullish move, and there was at least some possibility for upside here. Now again, I'm not ready to just switch over the overall trend, but I knew that this was going to be an aggressive bounce, to say the least. So here on price action, we have, based on candle closes, we have a low here, and then we come up and we put in another low. So we have a low here, then we have a lower low here. Here on the TJD, TDMACD, you'll see we have a low here, then we have very clearly a higher low right here. The red little stab down here is clearly very high in comparison to the bottom one right here. So, that's divergence, bullish divergence taking place between those 2 points. Not to mention we're obviously bouncing a key 200 simple moving average. So then when we came down here and we did the same thing again, it looked like we were potentially going to be bottoming out based on the knife, and now based on, that green little flip over on the histogram here, we now have one point that's low, one point that's less low, and then a third point that's even less low, or one point that's low, one that's higher, and one that's even higher than that. As opposed to on price action, we have a low right here, then we have a lower low, then we have a third lower low. So we have 3 drives of bullish divergence taking place on this indicator. And if you look at our traditional MACD instead of the Trader's Dynamic MACD, if this is too confusing, or you're not seeing what I'm looking at, or you just don't like this one, you can look at the regular MACD, and often it will give you less of a less diluted picture. It'll be a little more clear until you get used to it at least. But we'll see that this signature right here, where we have a low, and then a lower low, and then a lower low, with a low, and then a higher low, and then a higher low here, that is the same signature inverse that we saw back here when I was able to call the exact top of Bitcoin. So here we had a high, then we had a lower high, then we had a lower high once again. Here we had a high, then we had a higher high, then we had a higher high once again. So here we had 3 drives of bearish divergence, followed by powerful move to the downside. Here we have 3 drives of bullish divergence, potentially followed by a powerful move to the upside. Where would that upside take us? Potentially up to our target at like 48,000. I'm not going to talk about Wyckoff accumulation and distribution. That was something that I talked about way back before anybody else was talking about it. Now everybody talks about that, so you can go find that somewhere else. I don't need to bother with it anymore if everybody else is looking at it. So you can look at the Wyckoff distribution chart and how it relates to this. You can look at the Wyckoff accumulation chart and how it relates to this. But I will just touch on it briefly. There are 2 different types of Wyckoff accumulation that we're paying attention to. In one form of Wyckoff accumulation, the final drive down here will be a higher low. So actually will be like a low and then a like middle or lower low, and then it will see a higher low, which kind of will typically look like a head and shoulders inverse, followed by continuation to the upside. That's like type 1 Wyckoff accumulation. And then type 2 Wyckoff accumulation is when you come down and you put in a low, and then you put in a lower low, and then you put in a third lower low. And this right here is called the spring. It's very similar to a throw over. So here we have our throw over where you're at the top of the range, and then they push price to a new high, and that tricks people to get into a market long, followed by continuation to the downside. The spring does the exact same thing, but opposite. It's like a reverse throw over. So you push price down from a key level, and then it breaks back to the upside. And then, everybody goes short right here, and it takes out like all the long stop losses because we broke down from a key level. And then all the longs buy back in because price moving back to the upside. All the shorts close their position, and then it's able to create like that spring effect back in the price action in that direction. So, there are a couple things, though, that we have to pay attention to. Here we have the 200 exponential moving average, which basically has a flat slope now, which if price action stays below it long enough, it will be a negative slope. It will be rolling over. We have our 200 simple moving average, though, still has a fairly aggressive slope to the upside here. So all we have to do is literally move up on the daily, what is it? $1,000, not even, $700, and we're back above that. So typically, this will take, always, this will take longer to move because it's the simple moving average, and this is a volatile market, so it will respond a little bit slower than the exponential moving average. So what we have to pay attention to is what happens here on a little bit longer of the time frame. But potentially what I'm looking at here is that we may have bottomed this out, and then we're going to start seeing move to the upside. Now, does that mean we're going to new all-time highs? No, it does not. Does it mean that this is 100% Wyckoff accumulation and that we're now going back to the upside? No, it does not, because we're still below a key resistance point. This is key resistance right here. It was support when we bounced it, and we're now below that area. You could argue that the resistance is, let me see how this looks. Okay, we can deal with that. I didn't know how ugly this chart was going to get. You could argue that based on this, actually, let me use this one, that we actually have like a key support area right here at the bottom of this candle, and then we have also the support area at the bottom of this candle. So you could argue that while we're in this little zone here, which is basically between 32,800 and 34,165 roughly to the dollar. While we're between that area, we're like indecision in the market because we still have support or resistance above it. We still have support or resistance below it. And we're just like deciding right now. So it just so happens, obviously, also that, that's our 200 exponential simple moving average right above our head as well. So in my opinion, if we can get back above that 200 simple moving average right here and we close outside of this support / resistance zone, that there's more than likely possibility that we'll get that continuation to the upside. And then we can start paying attention to, as far as actual trending moves, what's taking place. Are we able to get above the 8 moving average? Are we able to get above the 21 moving average in yellow? And then once we do, are we able to cross the 8 and 21 back to the upside? So here we got the cross to the downside. That made me bearish on price action on the daily. So again, if we can get back above like basically 37,000, the 8 moving average will respond fairly quickly, and eventually we will get the cross back to the upside, at which point in time, we would expect this to be a similar move to what we saw with that head and shoulders back here, where we actually crossed to the downside, consolidated for a little bit, and then we got like massive continuation to the upside. So again, that's what I'm paying attention to. Now, if we zoom out here a little bit and just look at our Fibonacci's, and I promise we'll look at other charts here today, but I wanted to do a deep dive on Bitcoin because I feel like right here, this is a crucial point in the market. And there's going to be massive continuation in one direction or the other. So it's important we know what happens, because more than likely it's going to happen on a day when I'm not doing a video, when I'm not there for the group, for the community, whatever. So you're not going to know what I did until a couple days later. Now, obviously, just to kind of get sidetracked here for a second, the private group is opening back up. Next week is the beginning of the month. It's also the beginning of the second half of the year. So we're going to be doing 2 things in the private group. Anybody that's interested, let me know. We're potentially going to be doing what we had talked about, basically like, setting up for like retirement and, placing like our trades on and everything for essentially like our long-term, well, it's not even really trades, but more of like our long-term positions for like our stock and crypto portfolio for essentially what works out to like the IRA program or series or whatever. So you'll be able to see like obviously like more active, more live trades on that type of stuff. But also, you'll have access to me like every day of the week. So you don't have to worry about, and not even just every day, but typically like most hours of the day and night. But you'll know what I'm doing short term, long term, etc. So if you are interested in that, shoot a message to me. I can get my contact information obviously in the chat, but it's going to be a monthly subscription. So let me know if you are interested in that. So anyway, let's get back to it. So now let's look at our Fibonacci's and see what we're paying attention to and what these lines mean on the chart. So here at that 4,000 mark back here on futures, when we sold off like pretty heavily in March, that was clearly a swing low. So we have a low down here, then we have a very clear swing high right here, then we have another clear swing low. So we had a higher low right here, at which point in time we took out that high of the swing. It was no longer an internal retracement, and then we took out the 20,000 high, which was our previous all-time high, which is conveniently when CME futures open, at which point in time this was no longer an internal move. We were now have a high, then we have a low. This is all internal price action. Once we take out that high right here, it's an external move, it's a blue sky breakout, and we're basically like there's no resistance above our heads. So once we topped out here, 1, how did we know we were going to top out there? 2, what are we paying attention to now? So if we look at the green Fibonacci from that swing down here to the top right here, we are literally hanging out at, it's tough to see right now, let me kind of move this out a little bit. We are hanging out at the 236, which is our first substantial area that we pay attention to, our first key Fibonacci level. So the fact that we're hanging out at the 236 tells us a couple different things. Well, typically the longer you hang out at a resistance or a support, the more likely it is to break. So if we're hanging out at the 236, it looks like we're probably going to break through it, which we eventually did. We broke through it, and now it just so happens the 236 is the resistance above our head. So if we cannot get back above that resistance, we would expect continuation to the downside, which would take us to our next key Fibonacci level, which is like 22,750, which is our 382. So the 382 is the 38.2% retracement of the move to the upside, as where the 236 is a 23.6 or basically 25% move. And then again, we have the 0.5 after that and the 618. You could argue there's a lot of strong reasons for each of these levels and why we're likely to come down to that. Just one quick one on the 382, that would be the gap close back here at like 24,000. The 0.5 is, once again, Charles Dow theory. Typically, after a powerful move in a market, you would expect the market to give back 50% of those gains before continuing to the upside. That's like a market psychology reason. It's technically not a Fibonacci level, but is commonly practiced. And then finally, the 61.8% move is the obviously the inverse of the 38.2. If you take the two of them together, it adds up to 100. So they're just like the inverse relation of those. And then obviously that was our very clear head and shoulders break back here at like $12,000. So again, a clear support level that we would count on holding, as where like our 0.5 right here is basically like around that same level when we topped out at like 14,000. So there's strong arguments for each of those levels and why we might potentially be like coming down to those levels. Also, if you see the area we bounced exactly, that was an area we were very clearly paying attention to, because that was our 2 wicks back here from in January of this year. We wicked down to it perfectly here, wicked down to it a second time right there, and then here we wicked down to it and got bought up. So was that a reflex buy off of a key support level right here? Or is that going to be the bottom and we see continuation? I don't know yet. We'll have to wait and see. We did get a hard sell signal, the cross of our stochastics, but we also got a powerful knife move right here too. So, and then we have divergence between our 2 points on the knife, the same way we have divergence on some of our other indicator oscillators as well, telling us that we have at least some kind of a bullish reflex rally in the cards. Now, did that already play out? Yes, we definitely did get some, but is it done yet? We have to wait and see. So, and again, there's arguments in both directions, but that's what I'm paying attention to. Now, if we look at, there's one more thing we could look at for our Fibonacci levels before we move on here. There is a possibility also that we're not going to pay attention to this swing right here. So we can put our swing all the way down here at like that 3,000 low, and then just kind of look at it. It's less relevant in my opinion right now, because as of now, you know, the levels, and we can see in a second what I'm talking about. Let's make this one white. So yeah, we'll make this one white and nice and bold, and we'll discuss why it's important. Well, right now the 236 between the green that we're paying attention to and the white are basically the same. So you could argue that, oh look, we didn't close below the 236 here, so we have to use the white 236, and here we did the green 236. But the truth is they're a couple $1,000s apart, so it really doesn't matter. It's the same area, and we can't like get caught up on a couple dollars in one direction or the next. Now, if this breaks down, each level down is going to be further and further apart. So if we break down to the 382 here, that would be 2289. If we break down to the 382 in white, that's going to be 20,000, I'm sorry, 450. So there's definitely an argument that the 382 in white is going to play more of a role right here. But again, that comes into line with like our futures gap fill as well. So, and then if we get down to the 0.5, you'll notice that each one of these levels is further apart from the next. So as the chart and as the price action continues to develop, we can get a much more clear picture as to which one of these the market is respecting more. So obviously the white one we would expect the market to respect more, but a lot of times like the bots and algorithms will be programmed based on the last significant swing low, not the most significant swing low. So while we'll typically see price action react with both those levels, we're paying attention to which one is going to be like the actual market shifts. So now let's look at the actual broader picture here. This white swing Fibonacci level could not technically be drawn in until we had a swing low and a swing high. So this Fibonacci we couldn't have technically drawn in using any price action until we topped out in April. So, but what often happens is when you look back at it, when you Jen Psaki circle back to it, you will see that the market knew where it was going the whole time because it had been programmed, and these Fibonacci levels are key because they interact with each other in a key form. What am I talking about? Is that just crazy talk? Am I making shit up? No, it's a fact. Look right here. Here's our bottom, and then we basically came up to the 886. Once we broke through that 886, we came up powerfully to the 786. Didn't see a ton of price action movement there. Didn't see a ton of price action on the way up to the 618. But look right here at the 0.5. We literally topped out that initial push off of the bottom exactly at the 0.5. Unfortunately, no one knew that was going to be the 0.5 until here. So for the last, from June of 2019 until April of 2021, so for almost 2 years, nobody knew how important this level was going to end up being in the broad scope of things. So you could say, oh, that's just bullshit. If you draw enough lines on a chart, eventually it's going to touch it. Yeah, sure. You're probably right. So let's argue against that. here we formed a very clear descending triangle on that 618 level, at which point in time when we broke down from, we can make this a little bigger too. When we broke down from, I don't want to make it like that because I still want to see those levels. When we broke down from that descending triangle, what happened? It was at the 618 level. We broke down to it. We immediately tried to retest it to the dollar, okay? And then we broke down from it and almost got down to the 786, came back up, stabbed slightly above the 618, but again, it clearly acted as resistance right here. And then when we were unable to hold that level, what happened? It blew straight through the 786, and what did it do? It came down like to the dollar to the 886. So, I mean, you could argue that if something happens once or twice, it's a coincidence, but when it starts happening over and over again, and you see key things happening and key supports and resistances, based on like those fib levels, after a while, you cannot say it's a coincidence anymore. You have to just say, holy shit, how did bots and algorithms and all this stuff know? Well, it's the magic of Fibonacci. So, and then here we have the bottom right here at the 886. We came straight back up, and where did we find resistance at? The 618. We put in a bunch of touches at the 618, eventually ate through that level, and then got our reaction rally when we broke it. That was our head and shoulders. We came back down, retested the exact 618 level as support, lasted long enough. We finally got continuation. And where did we top out at? Exactly at the 382. Came back down, moved straight up, blew through the 236, came back down, and then here we found support at and around the 236. And then finally, we were able to draw this Fibonacci in. And when we look back at it, we can tell how important this Fibonacci level was the whole entire time, and how fucking amazing Fibonacci is. My man, Fibonacci. So then after that, now we can see why it's so important that we pay attention to these white 236 Fibonacci levels. But inside of that move, we need to pay attention to obviously these green levels as well, because here the green level acted as resistance very clearly. We broke through it, got a parabolic move up, consolidated, got a move up, topped out right here at the 618, found support at conveniently our other 618 in white, and then again we broke up through here, came back, tested exactly our 0.5 of that Fibonacci level, and then again broke through it, found support at the 382 level, again broke through it, found support here, found resistance here at the 236, and then finally topped out, at which point in time we could finally draw in the green Fibonacci level, and now we can pay attention to those and why both of them are extremely important. So anybody that argues we need to pay attention to this and only this doesn't know what they're talking about. Anyone that argues we need to pay attention to this and only this doesn't know what they're talking about. Anyone that argues that both of them are extremely important and that these markets are very clearly the direction and the price action is predetermined far before anyone realizes it. It's 100% the truth. So there is our deep dive on Fibonacci levels, why we're paying attention to those specific Fibonacci levels, and what we can expect to potentially happen. So now, looking inside of our blue Fibonacci, which obviously is the newest of the Fibonaccis, the least important of the Fibonaccis, but again, we got that double bottom right here, and then we have a retest of the bottom right here, potentially the bottom of the trend. From that point in time, we broke up and got rejected off the 786. The previous rejection was off the 618, and then you can see we had some key breakdowns from like the 382, and we had key support up here at the 236, etc. So what I'm paying attention to is now we have clearly the top right here, we have clearly our bottom right here. This is conveniently both those levels on the way up and the way down. I love that symmetry, but what we're looking for now is when we come up here, if we break through the 786, I would expect us to move up to the 618, target being 39,865. That's a very clear resistance that we had trouble getting back above on the way down, and our rejection point for that last little bounce. If we get above that, we would expect the 0.5, which is also a resistance slash support from back here. So that would be 43,700. And then finally, if we got all the way back up to 382, that's 48,180, at which point in time, we've got to really be paying attention to, is this just going to be a bounce up to a lower high and then a rejection, etc. So, and then also, we talked about head and shoulders. And again, I promise we will look at other assets today. I know quite a bit of the community is into Bitcoin and crypto, and even if you don't love Bitcoin, it determines where crypto goes, and the correlation between Bitcoin and crypto and everything it's undeniable at this point in time with the traditional stock market. So this can sometimes tell us the secret of what's really taking place on the stock market as well. So even if you don't like crypto, you should still like what we're doing here, because there's stuff to be learned for any market. So this is what we're potentially looking at right now. while we have that bullish pattern developing on the micro right here and potential Wyckoff accumulation followed by continuation to the upside, that could still be internal, and then we just continue to the downside. But right now we have a decent amount of symmetry taking place on this. And what we're paying attention to is, are we going to develop this head and shoulders? So we have a very clear shoulder here, and then the neckline that we bounce right here is the same neckline basically that we bounce right here. And then we have a very clear head up here. And then now we have a very clear right shoulder. Now, what we pay attention to typically is, I like to see symmetry, because if something is, here's the reason I like symmetry so much, and I always talk about why it's so important. When you see a symmetrical target and it has support and resistance that are like perfectly horizontal, more people are going to be paying attention to that, because people that are looking at the head and shoulders are going to see it, people that are looking at Fibonacci levels are going to see it, and then people that are just looking at the most basic support and resistance are going to see it. So the likelihood that more traders, more investors, more bots are all looking at the same thing that I'm looking at and agreeing this is a crucial level, if we break below this we're probably going down, if we find support here we're probably going back up, is extremely high. So that's what I'm looking for. That's why I do technical analysis. I'm trying to figure out what everyone else is doing so that we can all do it together. And sometimes it doesn't work like that. Sometimes I want to do the inverse, because essentially like the market movers, the market makers, the whales are basically just trying to trick the masses. So they will break through a key support or key resistance, and then afterwards you will see like that spring move potentially like here, or the throwover move like this. So we have to be cognizant of the fact that sometimes levels are broken to trick people, and that's why a break, a retest, and then a continuation is so important, not just a one little break and then that's it. So so here we have our head and shoulders pattern. Now we have a very clear support line here at our neckline. We didn't quite get to it here, and if you go by candle closes, you could draw it different ways. You could draw, here's the neckline and then here's the neckline, and we very clearly broken down from it. It's not as pretty as I would like it to be, but it's pretty symmetrical overall. And then again, we can look at the same thing here. Here we have our left shoulder all the way up here. Our right shoulder is slightly below it. That again is not a problem. If it comes up to the exact same level, everybody's looking at that level as resistance. If it comes pretty close to it but doesn't quite get there, again, most people are looking at that same level. But also, typically when you see a pattern like this, if it's a regular head and shoulders, if the right shoulder is smaller than the left shoulder, it shows weakness, because the bulls were unable to get the price action back up. And then if this was an inverse head and shoulders, an upside down head and shoulders, it's same thing but opposite basically. If the right shoulder is smaller than the left shoulder, it means when the price action pushed back down, it was more bullish because it didn't get as low. As we're down here, it would be like, say, down to the green line, 382. If it pushed down here but didn't get down to the 382, it would show that there's more bulls stepping in at a higher price than the previous time. So that's like, the psychology behind those levels and why they're important. So here we have basically a massive head and shoulders pattern, and we're just paying attention to, is it going to play out? What's going to happen here? Everyone probably sees this right now, but most people tend to see patterns. Most influencers tend to see patterns after they play out. So the truth is, while everyone is forgetting about this massive head and shoulders that's taking place, the same way they didn't see the head and shoulders that was taking place up here until after it happened, we were talking about it way back when. And that's why it's so important to see these things. And sometimes they get invalidated, and that's fine. But when we were talking about it way back here, no one was talking about this head and shoulders. And then once it broke down, everyone was talking about that head and shoulders. So we had a very clear head and shoulders taking place back here. No one was paying attention to. The head and shoulders broke down. And now here we are, basically, the head and shoulders here is turning into the head of a larger head and shoulders pattern. So this looks extremely toppy to me on like the macro, even though there is a potential for like a bullish play to take out in the short term. So that's the difference between, am I investing in Bitcoin right now? Am I, putting Bitcoin in my long-term portfolio, in my retirement fund? No, not at these levels. I think it's a horrible idea. Am I taking scalp trades for a potential move back up to like key resistances or to make a quick little like 20%? Yes, but that's two completely different things. And that's why it's so important to be looking at, daily, weekly, monthly, or even trading off like 4 hour, or, if you're like scalping 1 hour or 15-minute time frames. So, but that's the most important thing. I like to break it down into 3 different time frames. Am I scalping something, which means I'm just trying to make a couple quick bucks so that I can buy myself some food, or, make my car payment or whatever the situation is, pay my rent, whatever the deal is. You know what I mean? Which I do eat food, but I don't have a car payment, nor do I pay rent. So, but for instance, and then also, that's our shortest time frame, is that quick little scalp. It's just make some money and be done with it. And then I can deploy that capital anywhere else, or I can sleep at night. I don't have to worry about it. And then we have a swing trade, which is essentially like a short-term momentum trade, but can often turn into a longer position that lasts. And, that might be a day, it might be a week, might be a month. Typically, I look at scalps between like, a week to a couple months, something like that. And then finally, I have an investment. An investment is something that I'm typically buying with no intention of selling. Will I ever sell it? Yeah, definitely. I mean, if it looks bad, if there's something telling me long term that it's not going to be a good investment anymore, whether it's fundamentals or technicals, sure. But typically that is the only time I really pay attention to fundamentals, and really the only time I will take an entry into a position with no clear exit in mind. So that's the 3 different time frames, the 3 different types of, basically like scalping, swing trading, and then, savings account or investing. So let's get rid of our head and shoulders here. We can leave in this head and shoulders and see how it plays out. We can leave in this little like resistance support level and see how it plays out. As long as we're below it, I'm going to leave it red, symbolizing that it's resistance. If we get back above it, we can flip it green, and then it will be support. We do have the hard sell here, which is telling us potential bearish move. We did have like a decent little rejection wick come off that candle, telling us, maybe we are topping out right here. We'll have to wait and see. So that is our Bitcoin futures chart. I'm going to jump in the chat real quick and make sure nobody had any questions, and then we're going to jump over to our spot markets, Bitcoin spot market, and then we'll get into all the other cryptos. So, what's up, Tahid? Good to see you. I don't know if I already answered your question or whatever, but feel free to throw it out there if I missed something and you were curious about it. But yeah, let's keep rolling. And welcome to everyone that has jumped in. If you're not already subscribed to the channel, make sure you subscribe. Definitely appreciate you guys showing up today. Appreciate all the likes, positivity, and obviously support as well. So yeah, let's keep moving. We talked about the moving averages. Let's look at the weekly really quick, just for like a quick little refresher. Let's turn off all our drawing tools and let's simplify this down just to our moving averages. We are still paying attention to a very key level. Again, I talk about trend all the time and trading with the trend, obviously crypto trend trader. The idea of that is when the trend is up, I'm predominantly taking longs because I'm trading with the trend. When the trend is down, I'm predominantly taking shorts because I'm trading with the trend to the downside. So here, back when we went into an uptrend, the 8 and 21 crossed, I was looking for long positions, which I actually like long Bitcoin back at $4,000. And then like from that point on, once we had crossed this back to the downside, well, again, I typically look for exits way before I consider the overall trend. So if I'm trading to the upside, I might be looking for an exit along the way. But then once the trend flips to the downside, I'm looking for trades in the direction of the downside, which is how I was able to long this position here and then short this position here. And then again, long through like this entire move up here. Now, I'm not going to lie. I did not expect Bitcoin to get up to 60 something thousand when we were back down here at like 8 and 10,000. I really did not. But by trading with the trend, I'm able to capture the majority of that move. Regardless of what I think is going to happen, I'm able to use those indicator oscillators to my benefit and then kind of take my bias out of the picture. Because if you asked me back here at 10,000, were we going to 65,000 in the next couple of months, I would have said, no, Bitcoin's been underperforming. It's probably not going to happen. But sure enough, there we were. So okay, so here we got the cross back to the upside between the 8 and the 21 right here. And then again, from that point in time right here, price action wise, the weekly, it was below 10,000, and then we went all the way up here. And then again, if you're waiting for the 821 to cross, basically the close of this candle right here would have been the 8 and 21 cross. You still capture the move from 10,000 to 36,000. So $26,000 profit on each Bitcoin you purchase, so that's quite a hefty trade. But now that we're underneath it, now that the 8 and 21 have crossed on the weekly, I'm much less likely to take a trade to the upside. I'm not looking for, again, on the weekly time frame, this is to me looking like an investment, something that I could potentially hold for over a year and not have to worry about like short-term capital gains taxes on like my trading account or whatever. More of an investment. As we're here, once we've crossed down below it now, I may be looking for some scalps back to the upside after like a reflex rally or a aggressive dump, but I'm not really looking to take on long positions at this point. If we do get back above the 21 moving average at like 42,000 and we cross these back to the upside, while I'll initially be skeptical because we still won't have put in a new all-time high, I will definitely be paying attention to this, as typically what happens on the weekly, again, we don't have as much history on this. We can see it clearer like on our traditional market chart or spot market chart. Here we had to cross back down to the downside. Here we had to cross to the upside. Here we had to cross to the downside. Here we had to cross to the upside. So this is like a pretty choppy area, but we had a few times where, you may have gotten a false signal, or maybe you like, we're going to long right here and then it got rejected. Maybe you longed right here and then you had to sell back here at the same spot, so you didn't make any money, but you didn't lose any money either. You got out of the price action before this massive dump, and then eventually it works. Eventually the 821 cross works here and you crush it. Eventually the 821 cross works here and you crush it. So we don't need to capture this entire move down right here. The most important thing is that we're not getting chopped up. We're not holding everybody else's bags while the markets get wrecked for the next year, which is what diamond hands means. Diamond hands means you're 100% willing to just hold everyone else's bags for the next year, for the next 10 years, maybe even indefinitely, and that you're just so sure that whatever you bought is good that you're never going to sell it. That's what diamond hands means, and that's not trading, that's not investing. So that's why I make fun of AMC apes and all this stuff, because they're basically buying into the fundamentally worst things in existence, based on what is a short squeeze. I'm not against short squeezes. It makes sense if something's shorted over 100% to squeeze the shorts and make some quick money. But to diamond hands something like AMC or GameStop or like, whatever, Dogecoin makes no sense, because none of those things have good fundamentals at all, in my opinion. So, but again, I'm not trying to be like negative. I'm not trying to rip on people's babies, whatever. So, but on the weekly, we had the sell buy sell signal. That is an extremely bearish signal right there. And we have only red histograms since we broke down from that level. And now here we have a red slope line. So everything on the weekly is bad right now. And then finally, on the monthly, we are below the 8 moving average. We have done that previously. Again, we don't have a ton of time on this chart. We'll see a little more clearly on our spot market chart. But, basically, here we operated below the 8 average the whole time. Here we operated above it, came down, found support on it, and then we have never really like closed too long below it. But you'll notice here, now the 8 has a very clear downslope. Here, it kind of just was chopping sideways. You could argue for like 1 month it was down here, for like 1 month it was down here, but it never was like sustained to the downside. Here we have 1 month it's been down, and we're about to have in a week potentially a second month that it's angled down. So again, we don't have enough time frame, but when we look back at like our next Bitcoin chart, we can see more clearly. Once you start getting like multiple months of negative slope on the 8 moving average, you're more than likely going to be going into a long consolidation pattern or a bear market. And then once again here we have our parabolic SAR, which is these red dots right here. They just help us to see the trend. Once we take out the parabolic SAR, and the reason, okay, the breakdown of the parabolic SAR and why I like it so much. SAR is an abbreviation for, or I can't think of what the word is, but it means stop and reverse. It's a stop and reverse point, which means it topped out right here. So until we get back to that point, we can consider that is like a clear swing point or a reversal point. And the reason it's called the parabolic is, as price action moves, it slowly gets dragged down with the price action, but it actually accelerates. So it becomes, the slope of the SAR becomes more and more intense as time goes by. So you'll see it starts off with like a slow move, and then it starts to accelerate to the downside. So eventually price action has to interact with the SAR again. So once we take out the stop and reverse point right here, it flips over to green. And then typically that means we're in an uptrend. It just so happens that on the monthly right here, that as soon as we took out the SAR right here, we did nothing but go down since then. And then again, as soon as we took out the SAR right here, we did nothing but go up since then. So it's a little choppy on the monthly right here because we have a very clear bear market. We have 2 different flips of chop right here, and then we have a very clear bull market after that. So now here we have flipped it over again to the downside. So are we going to get a situation like this where that was just this like violent move sell off right here, and then we chop and eventually take it out somewhere around like the 43,000 range in a few months? Or are we going to go into a long downtrend parabolic move like that and you know, a multi-month or year bear trend? And then here on the monthly again, this looks terrible to me. We have 2 red histograms in a row. Anyone that knows how I use the TJD TDMACD, once we get 2 red histograms in a row on that time frame, I become extremely bearish on the asset. The same way if we get 2 green histograms in a row below the 0 mark, I get bullish on that asset. It's the first of the 3 portions of the TJD TDMACD that makes me get bullish or bearish on it. So, and we can break that down in more detail either later on or in a different video, or you can go into TJD TDMACD video under indicator series and actually talk about the 3 different points and why I use them and what they mean and how I use them to like position into an asset or out of an asset or into a short based on those. So, and then here you'll see on the Jewel Thief, we have left the bullish control zone. We are no longer, the bulls are no longer in control once we drop below the 80, and then this red goes away and it goes back to neutral. So we're neutral from 80 all the way down to 50, and then from 50 all the way down to 20. And if the stochastic gets all the way down here to 20, it will flip over the background like highlight in green, and it means the bears are in control. They are dominant. Typically, bullish control zone or bearish control zone will mean that, you know, the trend is potentially getting exhausted, but there's often times where months and years can operate inside of a bullish control zone or a bearish control zone, and you can see hundreds and thousands of percentage of gains. So the last thing you ever want to do is get bearish because we're in the bullish control zone, or bullish because we're in the bearish control zone. It's when we exit those zones that things get important. So now if we get this cross between the green blue slope right here and the purple the blue stochastic right here and the purple stochastic right here, when these two cross, and the blue moves quicker than the purple, so as soon as they cross, we're going to get a hard sell signal for the first time ever on the Bitcoin futures chart. At which point in time, the monthly, once again, will look extremely bearish. So, but again, on the monthly chart, the 821 cross will be extremely bearish to me based on this indicator alone. The parabolic SAR will be bearish to me based on this indicator alone. The bullish control zone or bearish control zone exiting or being inside of them, or what I determine like, you know, bullish or bearish in this indicator. And then the cross of the 821, or I'm sorry, of the stochastics rather, the hard buy or hard sell signal, which we'll see pop up and you get like the little S or the little B. Those are what I use as like the final portion. So, and then again, there's 3 portions here. On this time frame, we can't see it, so we'll look at it on a shorter time frame on our spot market, so we have a little more reference. So I'm gonna take a quick drink, and then we will continue on here, and we'll talk about a couple more things as well on the spot markets. What it's telling us that's the same, what it's telling us that's different, and what it's telling us that you know, basically the futures market's not telling us at all. All right, so let's flip over to the monthly and then we'll work our way backwards from there. So, all right, so there's a couple things going on here that I want to pay attention to. Let's start with what I've drawn on this chart. This is extremely complex right now. I know that, but this is what I think may potentially be happening in Bitcoin. And this is like, people always make predictions like $250,000 Bitcoin, $500,000 Bitcoin, but they can never tell you why. They can never give you a reason that that was their target or why they expect that to happen. I'm going to give you a reason, I'm going to tell you why, and I'm going to tell you what I expect to happen in the long term or what potentially could happen. Now, does it have a 50% chance of happening or a 5% chance of happening? Can't tell you that for sure. But what I potentially think could be happening right now, or, you know, the more conservative or defensive you know, person in me thinks could be happening is we could be completing a 5-wave structure in Bitcoin, and we could potentially do something we've never done before. So this was our initial from 2011, like basically like near conception of Bitcoin, essentially back at $2. So from 2011, and you can actually get a little bit longer of a time frame chart than this, but this gives us everything we need. So which if you did want to ever look at that, it's the Brave New Coin Index. We'll actually give you like a little bit more, but that's Bitcoin. So back here in 2011, we went on a bull market, and the bull market lasted until 2013. And this was an important bull market because it was the time when we basically had a parabolic top, a sideways consolidation, and then a new high top, which is potentially what we could be doing now. But you could also argue that we already did that. We had a parabolic top right here, came back down, and then we put in a new high. You could argue that this is our initial parabolic top. We're going to come back down, and then we're going to put in a new all-time high still. So we don't know. There's not enough data points, but those are a couple different options or things that people say. So when we topped out here on that one, and then we went into a bear market, you'll notice that I have a Fibonacci drawn here in orange. That orange Fibonacci from the $2.13 mark to the top of that bull market is $1,232. So, that was a pretty epic bull market, obviously. Most people had not heard of Bitcoin then. From that point, we sold off in between the 236 and the 382 Fibonacci level, like right smack in the middle right here. It retraced back down to $159. It gave back roughly 30% of the entire move to the upside. At which point in time, it found support here, chopped around for basically, from when it topped out till when it bottomed out, and then it chopped around essentially like 8 months, and then finally started moving back to the upside, and then eventually broke off to a new all-time high, at which point in time, blue sky breakout, and it went absolutely parabolic, which tends to be what happens when you go to a new all-time high. So if we argue that that was our one move up here, the two was our retracement, and then was followed by a three. The three parabolic top was up here at $20,000. That was our last, bull market back in 2017, 2018, topped out here, and then it sold back off. And you'll notice that the green Fibonacci goes from the bottom here at $145 to the top here at $20,000 roughly. And then we sold back off. We sold off exactly to, in the green here, the 382 Fibonacci level, which was basically $3,000. So here we sold off initially between the 236 and the 382. The second move, we sold off to the 382. And then let's look at something else inside of this, which, most people are not going to know to even look at or pay attention to if they did know it. Let's look at our Fibonacci extension targets and, what we were potentially looking for a top at. So if we take from the top of the one to the bottom of the two, it will give us our Fibonacci extension target. What that means is once we take out the previous all-time high where we started it, it will give us Fibonacci extensions, which give us like targets for like a blue sky breakout. Now our initial target would be what I normally pay attention to is the 1.618, which would have been an all-time high at the time of 4,500, or potentially the 2.618, which would have been an all-time high target of 33,000. So it did not go exactly to one of those points, but it at least gives us a target, like a projection into the future for where we could potentially expect it to happen. I believe it actually was closer to like two times. So, and then from that point in time, the retracement took us to the 382, and then we were able to, eventually break out to a new all-time high, and that was this bull market. So if we take a Fibonacci from the bottom of that bear market at $3,000 to our potential top here at $65,000, we're going to pay attention now to where we were traced to. And this was essentially the Fibonacci target that we were looking at in our previous video. We were looking at a fib target from the bottom here to the top here, and we were looking at a fib target from the bottom here to the top here, and we were talking about how important those fib levels were and how much we interacted with them along the way. So now you'll see here we are at the 236, just like we discussed in that video. More than likely, based on what's previously happened on these bull markets, here was between the 236 and the 382, here was to the 382. So what we would expect to happen is between the 236 and the 382. So if we say it's going to be right in the middle between the two of them, we're looking at a bottom of roughly 25,000. If we get down to the 382, we're looking at a bottom of roughly 20,000. That would also be a retest of the top of the three wave, which would essentially be us just like coming back down and retesting our previous wave. Now, something that has never happened in any of these, two confirmed or potentially three bull markets that Bitcoin has had, and these are the only three bull markets Bitcoin has ever had because they're directly, relevant to the halving cycle, which is every 4 years. So this is like a 4-year period basically from bottom to bottom, and then this is a 4-year period from bottom to bottom, and then this is a 4-year period from bottom to bottom, or maybe you go from top to top. It's not going to be exact, but just roughly time cycle analysis. This was November 2013. This was December 2017. So almost exactly 4 years apart. And then we would expect this to theoretically top out sometime between, December of 2021, which is why I expected, or still potentially expect, this bull market to continue on through the end of the year. So it seems more likely to me at this point in time, we would have like a consolidation period and then like 2 more just big parabolic months like that, or something essentially like that, where we have 2, 3, 4 months of just full-on parabolic action. Now, assuming that's not correct and we have topped out here, if this price action sells off below the 236 or the 382, we will do something we've never done before. If we go below the 382, we will actually sell off lower than the previous all-time high. We have never done that. When we sold off here, it was obviously way higher than like the initial price for Bitcoin. When we sold off here, we came down and we didn't even come close to the previous all-time high of that 4-year cycle. So if we sell off here and we come down below, hang on one sec, I'm gonna cough. Well, more of a throat clear, I should say. If we come down below that 20,000 point, if you're going by wicks, or if you're going by candle closes on the monthly, if we come down below like that 14,000 range, which was also like that little mini top that we had right here, that will be something we've never done before in Bitcoin's history. So if something like that does take place, if we come down below that 382, we will have a deeper retrace than we've ever had before. We will take out the all-time high of the previous bull market, which we've never done before. And then that will also confirm my theory that this is in fact a 5-wave structure, and the 5-wave structure has completed. And if you know Elliott wave structure, typically what happens with Elliott wave structure is the 5th wave everyone gets absolutely decimated on, because what they're expecting is to Fibonacci from the bottom of the 0 down here to the wave 1, and then the retrace to roughly 236 or 382, and then here from the bottom of wave 2 to the top of the wave 3, they will Fibonacci in green down and expect it to come back down to the 382. And then finally here on the last wave, what people expect is from the bottom of the 4 to the top of the 5, they Fibonacci that. They expect it to come down, based on price action, between the 236 and the 382. So they would expect 20,000 to be the low, and then all of a sudden 20,000 breaks and there's a capitulation event because it's doing something it's never done before. The real way, and the reason that wrecks so many people is because when you do a 5-wave structure, after the 5th wave has been completed, you need to Fibonacci not from the 4 to the 5, but you need to Fibonacci from the beginning of wave 1 to the top of wave 5. So at which point in time we have this red Fibonacci in place right here. Just to make it a little brighter, I'm going to switch it over to yellow so it's a little more clear. So hopefully you can see that a little better. This Fibonacci from the bottom to what could potentially be the top, or is the top at least for now. If we come down to the 236 of that Fibonacci, that's going to give us our initial target right here for a 5-wave structure retrace to the 236, which is $6,000. Do I think that's likely? No. Do I think it's possible? 100% possible. Next would be the 382. If we come down to that, that would be $1,257 Bitcoin. Again, I'm not saying that would happen, but there's 100% a possibility. Hang on one second. There's 100% a possibility that we could come down to it. And then I'll talk about this white Fibonacci or wave as well. And then finally, if we come down to the 0.5, that would be like $370 Bitcoin. The 618 would be $100 Bitcoin. If we break down below the 618, it's probably means Bitcoin is dead or it's dying. Again, on the monthly though, we have left the bullish control zone and we're about to get the cross on the stochastics. We also have 2 red monthly histograms in a row. So it is very likely based on, it's very hard to tell on this chart, but here we had, as soon as we got multiple red histograms in a row, that was our top of wave 1. As soon as we got multiple red histograms in a row, that was our top of wave 3. And now here we are on the monthly with the multiple red histograms in a row, and that is potentially the top of our wave 5. And then once again, we left the bullish control zone here at this little mini top, but we continued higher, and then the knife called, like the exact actual top right here, sold back down. this was our best place to buy inside of the bearish control zone right here. When we got the hard buy in the bearish control zone, we saw massive continuation after that, at which point in time we went inside of the bullish control zone. When we got the hard sell leaving the bullish control zone, that was the absolute top of the three. Again, we came down here, consolidated inside of the bearish control zone. Again, once we got the hard buy on the bearish control zone, we came up out and then entered into our massive bull run. And now here we are leaving the bullish control zone, about to get this hard sell signal at what potentially is the top of the wave 5. So there's unfortunately a very bearish case on the monthly for Bitcoin, and potentially a case that could take us down realistically to like a 13,000 level. Now again, I'm not saying that that has to happen. I'm not saying that that is going to happen. But I think probably if Bitcoin starts doing stuff it's never done before, people will get extremely bearish and give up on Bitcoin, at which point in time that may be the best time ever to buy. I mean, you know, arguably buying Bitcoin now at $13,000, or I'm sorry, $1,300 could be the best buy ever, because the network effect will be phenomenal. Everyone else will have given up. Michael Saylor will have capitulated. You know, all this stuff will have happened, and then we will get the absolute best buy ever. At which point in time, the most bullish thing ever could happen. And again, I don't want to get everyone's hopes up. I'm sure people have quit watching because I just was talking about bearish stuff and people don't want to hear it. But what I see potentially happening is at the completion of that 5-wave structure, when we sell back off, that would be basically the one, this whole 5 waves from $2 all the way up to $65,000. That is our wave 1 in white here. At which point in time our wave 2 would take us down roughly between the 236 and the 382 back to $1,300. At which point in time our wave 2 takes place. And where would our wave 2 take us up? New all-time highs, of course. And where would the wave 2 new all-time high be? Well, I have this purple Fibonacci extension in place, which would be from the top of the wave 1 or our wave 5 at 65,000 to our retracement potentially, and again it's too early to know for sure, but down here at like $1,387, that would be our Fibonacci. So we would go from the top right here to the bottom right here, and then this purple, I don't know if you can see it, I'm going to make it brighter one more time. Let's make this there's so many colors on here, it's tough to do. What if I make this one orange? Can you guys see that better? I'm sure you can see it better. Our Fibonacci extension target from the top of our wave 5 to the bottom of our 2 retracement, or the 1 to the 2 here in white, would take us up to roughly the 1.618, which we overshot every other time previously. Well, the 1.618 target is $869,000. I repeat, $869,000. The 2.618 wave target would be at $4,679,000. I know that sounds crazy. No, but I'm just saying, based on what's happened in the past, based on a 5-wave structure and what potentially could happen, that's it. So if we did get the retracement down here and then we topped out at the 1.618 target at $886,000, and then we retraced from the bottom here to the top of our potential wave 3 target, that would bring us back down to roughly, and you can see here in I'm going to switch the color on this one now. Let's look at this white one right here that we have. That is from the top right here. Oh no, I switched the wrong one. Hang on. Oh no. From the top right here at $803,000 to what would be a 382 retracement in red right here, from the bottom right here to the top right here. The 382 retracement would take us back down to $70,000, which is roughly our top from right here, at which point in time we would move back up for our wave 5, and the wave 5 potential target based on the Fibonacci extension from the 3 to the 4 here. And again, there's a lot of assumptions without any hard data points along the way, but that would take us up to a 1.618 target for wave 5 of our completed wave structure, which would be, basically like Bitcoin citadels. It took over the world, and that is at it's a huge number, so give me a second. 060 would be the thousands, so it would be 4,435,060. So this is your legitimate technical analysis potential target of $4,612,692. So you could argue that I'm bearish on Bitcoin, but you could also argue that I'm the most bullish on Bitcoin. So I'm going to take a quick break, and we will continue on from there with a little more Bitcoin technical analysis, some other cryptos, and then we'll jump into the rest of our assets as well. So, and then I will actually jump back into chat when I get back, but I'm going to use the restroom real quick. So don't go anywhere. All right. Welcome back. Or if you've been here, welcome myself back. I do want to remind you, if you are just tuning in also or missed the beginning of the stream, this is not financial advice. I am not your financial advisor. These markets are extremely volatile, so please do your own research, trade responsibly. I do not think Bitcoin is going to $4 million anytime soon. Wink. All right, so let's keep diving in here. So we did like the long-term view. I'm technically the most bullish person ever on Bitcoin based on that view. So here we can get a little better of a picture of what we're looking at as far as like the parabolic SAR. We did have like that one little false alarm back here in the initial bull market of 2013 where we had like 4 parabolic SARs, red. And then here we had a bunch of reds throughout like this bear market. Once we took that out, we were back in the bull market. And then again, bunch of reds. Once we took that out, we had a bunch of red consolidation and then went back in the bull market. And then we have flipped over the parabolic SAR red once again. So we need to be very careful. We have the hard sell signal about to print right here. We have multiple red histograms in a row on the monthly. Does not look great. Switching over to the weekly. Again, we got the divergence signal, sell by sell, bunch of red histograms, lost the blue slope line, and now here we're entered officially into the bearish control zone. So the bears are in control. We're below the 8 and 21. They're crossed to the downside. We have the red parabolic SAR. We have a bunch of red histograms in a row and the red slope line. So literally every single thing on this chart right now is telling us bearish, except for one thing on the weekly. We still have a positive slope on the 200 exponential and 200 simple moving average. But usually what happens is we come back down and test those. So if we come back down and test the 200 exponential, it's currently at 17,000. The 200 simple is currently at 14,000. So while you could argue that that's still bullish because they have positive slope, coming back down to them at like 17 or 14,000 might not make too many people happy. So we got to be careful, but there is still some potential there for it. So Tahid said sick technical. Yeah, thanks, brother. I try to get everybody excited every once in a while, but I don't want to get people too excited and they start doing dumb stuff, because it could be like, you know, that's basically, that chart is if like Bitcoin goes mainstream, takes over the financial system, and becomes like worldwide adopted like currency, store of value, like whatever. It's basically if Bitcoin takes over the financial system. What's the percentage chance of that happening? I don't know. Maybe it's 5%, maybe it's 50%, maybe it's 95%. I can't tell you that, but what I can tell you is what could potentially happen. And, you know, if you looked at Amazon stock and did this exact same technical analysis and the way I did it with Fibonacci extensions and retraces and everything, we could go back and do that one day. And if you look back at Amazon stock, it would sound crazy if I told you Amazon was going to $3,000 when it was at $4. And that's the same thing as Bitcoin going to $4 million, you know, when it's at $20,000 or $50,000 or whatever. So, but there is technical reason that that could potentially happen. And nobody ever talks about that. They just talk about, oh, if it takes over gold and it becomes $10 million, or I'm sorry, $10 trillion, then Bitcoin will be $500,000 a coin. Well, it's not realistically going to ever take over gold, because gold's not going to go anywhere based on the Lindy effect. Gold's been around for thousands of years, so maybe it becomes equally sized to gold. But more realistically, if Bitcoin grows to $10 trillion, gold's market cap will probably be $100 trillion at that point in time, because it's not like gold's just going to go away or whatever. So, I mean, there's most people's arguments or like best case scenarios and why are extremely flawed, and I could pretty much like throw all of them in the trash in like a couple sentences. But based on actual technicals, there's definitely an argument for Bitcoin to go to ridiculous prices. So, but weekly does not look good. We're hanging on to the 50 and 55 exponential right now. 50 simple is the dark green. 55 exponential is the light green. We're barely hanging on to them. And again, on the weekly, we have a new low. So once we have a high and then a low and then a lower high, and we start taking out that low, you know, it's no longer like internal retracement of this first sell-off. It's starting to look more like this is an A wave, this is a B wave, and now we're getting ready to put in the C wave. Now, does the C wave bottom out at 26,000? Does the C wave bottom out in the, you know, teens? I don't know. It's too early to tell. But a good way to tell typically for an ABC retracement is you take from the top to the bottom, and then you take that same line, and then you take that from the next stop to the next bottom, and it gets bigger because we're in log scale, which you have to be in for crypto. But that gives us basically from our top right here all the way down, and that gives us a bottom of like $6,851. So that would be an A, a B, a C retracement. And that takes us down to what amounts to, you know, if you remember that chart we drew earlier, that takes us down to what amounts to that massive, massive Fibonacci to the 236 of the entire 5-wave structure, assuming that was like the top. And it starts doing things Bitcoin has never done. And, you know, maybe it gets like a bigger extension than that and takes us down to that $1,300 range. And then again, you know, without getting too bearish here, but what's that big yellow line? Well, if we take this yellow line and we start to just move it up, you'll notice that because the log scale gets smaller and smaller. What is that yellow line? That's the break of the neckline right here. This is our neckline of our head and shoulders. that's the top of the Head and Shoulders. And then if we move it back into place and we just zoom out, this yellow line is just the log scale version, which obviously we're using for Bitcoin, of the break from $65,000 down from $30,000 or whatever you want to call that neckline at. So that break now takes us down to the technical point we just talked about, which is our blue box area, which is, if we look at our Fibonacci's, that is our yellow Fibonacci. So the 236 was the yellow Fibonacci retracement of all the way from down to $2 to $65. The 65,000 is the 236. And then from that $2 to $65,000, the 382 is also the measured move of our Head and Shoulders break, which takes us down to our 382 Fibonacci extension, which is our blue box buy area right here, and the potential target I have for that wave too. At which point in time, again, if we get down to like $1,300, $1,400, everybody's going to be extremely bearish on Bitcoin and say it's dead. It took out the low of the previous bull market, or bear market. It's, took out the high of the previous bear market. It's doing all kind of stuff it's never done before. Bitcoin's done. It's dying. No one's paying attention to it. The only way it ever gets back down that low is if people legitimately believe it's dead. And based on the size of this push up here compared to our size of, the 3 push up here and the 1 push up here, it's not unrealistic to think we have just some ridiculous sell-off after that. And everyone thinks Bitcoin's dead. It's over-regulated. Every country makes it illegal, like etc. And then it gets down to $1,300 a few years in the future, goes through a long consolidation phase, gets our measure move, and then next thing you know, we're on our way up to $4,500,000 and whatever $1,000. So, all right, so that's our weekly, and then let's look at our daily, and we'll kind of get an idea of what's going on in the daily. Again, I'm going to turn off the drawing tools. Here on the daily, we bounced perfectly off. We came down to the 377 a couple times right here, and then here we bounced the 528 perfectly with that wick. Again, that's like our same wicks from back here. So, we have to be careful because essentially what this looks like, we got a couple, and this is sort of a divergence between our charts here. And if you've been watching the channel for any amount of time, which I know most of you guys have been, you know that the whole entire time when we were getting these fake crosses on the 821 along the way, I was telling you guys, I was not convinced that I thought it was a fake cross and we're going to save it because the Bitcoin futures cross never got the 821 cross. So here we had that initial cross with the Head and Shoulders that I called out way back when. And if you were in the group before, you know that we profited very well off that. And then at the 821 cross back here, we got bullish again. It came all the way up, failed to cross here, failed to cross here. Those were 2 fakes. And then here we got the first 821 cross. Well, if you look at the futures chart, it never actually crossed because this happened because of weekend price action. So this was our first divergence, 821 cross, false alarm. Here we saved it again. Here we saved it again. And then here it crossed again and faked us out, or faked some people out, not us. But that was when it lined up with the futures chart. And it was like, wait a minute, futures did it this time too. So now we have both our charts telling us the 821 has crossed the downside, at which point in time we got another fake cross because we got a fake to the upside. The 821 crossed here back to the upside, but did not cross back to the upside on futures. So again, a divergence. So when both charts are telling us the same thing, it's much more believable. When one chart is telling us something and the other's not, it's 50% as believable because you have one saying yes, one saying no. So I give it 50% weight. When both say yes or both say no, I give it 100% weight because that's all of our data points lining up. So at which point in time, we capitulated down here. This tried to get the cross back to the upside and got rejected. Futures did not get back to the upside. So again, I'm paying attention now to, are we able to get back above this 8? Can we get back up here? And can we get this cross back to the upside? But at this point in time, we now have 200 exponential to the downside, 200 simple still to the upside. On the daily, still looks bad. Does not look good. But there's definitely some potential here based on that daily divergence that we were talking about previously. And if we look at it again here, we have our low. Here we have our low. Here we have our second key point of the low right here, which is clearly higher. So we have a low here. We have a higher low. And then we have a third low right here, which is higher. So that's 0.1, 0.2, 0.3. Each point is higher than the last. That's 0.1, 0.2, 0.3. Each point is lower than the last. So that is bullish divergence, which typically we will get a reflex rally to the upside. Does it mean we need a reversal and we're immediately going back up? No, but there's definitely potential. So if we look at our Wyckoff accumulation chart, like the second version of the Wyckoff accumulation chart, it tells us that this was our spring and we're potentially going to jump back to the upside. We also have bullish divergence on the daily time frame, tells us we're probably going to get a jump back to the upside. So that's a couple reasons we could potentially get bullish. And then again, I don't like to look at short time frames on the actual channel. I do this more in the group just because, you're not going to see me for a couple days and so much can change. Here we got the sell signal. We entered the bearish control zone, and then we got, this basically like massive sell-off, but it got bought like completely back up. So when you get a massive wick like that, and then a huge, huge wick and a green candle like that, this is basically, a nail. So when you get a nail like that, or a hammer, it basically tells you that we're going to get continuation. It's a rejection of lower prices. The same way that if we get like this, let's look at this one over here. It's a little less intense, but this candle right here tells us we're probably not going any higher. This is a shooting star. You basically have a red candle with a giant wick at the top. That's a rejection of higher prices and typically tells you can see continuation to the downside. So that's why it's so important to have such like a multi-dimensional like facet of technical analysis. Because I use everything from candlestick analysis, which is a single candlestick, like what we saw right here and right here. I use candlestick pattern analysis, which is typically like 3 or more candlesticks telling us something. And then also I use like actual like moving averages, indicator oscillators, support resistance, like all the other different things. And then on top of that, we couple all this together with like our actual ability to like position size and then base our trades based on, risk reward and probability of success. So when you take all those things together, you take the whole, all the snow, all the different things, you pack them all together in your hands, and then you get this like ice ball that you're going to like wing at your friend when he's not looking. And that is your trading plan. The trading plan is what you use to basically knock the market out. And if you don't have a trading plan, or there's one thing inside that snowball that's flawed, like if you pack one of those little like hand warmer heat packs inside your snowball and you try to make an ice ball out of it, it's not going to work. If you pack up, a rock inside of it and you throw it at someone's head, like they're probably going to die. And then you maybe won the snowball fight, but you lost that life because you go to prison. So there's like a bunch of different reasons why you can't have a flaw inside of your trading plan. In this case, that's our like snowball or ice ball. And it's so important to have all of these things have a solid foundation so that you can become like a successful trader, investor, or just like human being. So, essentially that's what we're looking at. That's why it's so important to look at like the different time frames and everything. And why I think we could have potentially bottomed right here based on like those divergences on the longer time frames. But now you'll see here that something's happening that we don't want to see happen. Since we started doing the video, we are actually like, we were potentially before this candle looking like we were going to close back above the 21, and then we were going to get the 821 cross back to the upside, which it crossed to the downside back here at 38,000. So it tells you on the 4-hour, get out at 38,800, and then potentially you could wait and get back in at 33,000, and you'd be much better off for it. But it looks like we're potentially going to get rejected here, which would not be good, obviously, and it would make me second guess my long position. But regardless, so that's like a little shorter term time frame on Bitcoin. We have, though, again, let's talk about a little bullishness. We left the bearish control zone back here. We got the hard buy signal. That's good stuff. We've got a bunch of green histograms in a row. We have crossed back above the slope line. So the next and final step on the TJD TDMACD to make us bullish on the 4-hour time frame is we flip the red slope line over blue. And then typically once it flips over blue right here, you'll see we get massive continuation. When it flips over blue right here, you'll see, we're getting massive continuation. And then potentially if we flip over blue right here, we could maybe come back up, retest the 200s at like 38,000 or something like that. But again, we'll have to wait and see. I don't really like doing like super short term technical analysis on the actual channel just because so much changes. We did get the, you'll see the dark green and dark blue line right here. We did get the death cross right here, and you'll see the bright green and the bright blue line are very close to getting the death cross right here. Typically we will come back up and try to avert the death cross. We did it once here to try to stop the traditional death cross from happening. So potentially we could do it again here and try to like stop the exponential EMAs from death crossing. So that would be like 40,000. So there's definitely some arguments to be had on the shorter term, at least, that we could have some bullish price action. But we did get the hard sell signal. We do have a bunch of red histograms now. We are getting rejected by the 8 moving average. So if we lose this 377 moving average, the only target left on the daily, in my opinion, is that 528, which is back down at like 28,000, at which point in time, you know, it's basically just free fall from there. No more moving averages to save us. Okay, so that's Bitcoin. Let's check out Ethereum. Ethereum is hanging out between the 200 exponential and simple moving average. We are inside the bearish control zone. We have a bunch of red histograms in a row. We are well below the slope line, and it is red. Ethereum looks bearish. It did take out its low. It does not have that same bullish divergence. It has a low right here, and a low right here, and a lower low right here. It has a low right here and a lower low right here. Here on the TJD TDMACD, though, it does possibly have it, but it's not seeing any green histograms yet on the daily, so it's impossible to say this is the bottom when we don't even have one daily green histogram yet. So I would say right now this looks like a giant descending triangle, and it looks bad, but we'll have to wait and see. You know, again, you guys know I've been bearish on Ethereum since way back here at $3,300, but I sold most of my Ethereum at $4,000, and for the record, I bought most of my Ethereum at like $85, so did pretty well on that one. On the weekly, you know, Ethereum is in the danger zone. It's below the 21. We still got a few days left, but it looks like we're about to get the 821 cross to the downside. We have the hard sell, hard buy, hard sell signal. We have left the bullish control zone, and we have a bunch of red histograms in a row. Ethereum does not look good. If we break down from here, we're talking about like the 50, 55, or the 90, which is support anywhere from like 1,400 to like 1,100. If we break back to the upside, we're going to have to worry about resistance here at like 2,300, at which point in time, you know, maybe closer to like 2,700. But Ethereum looks bad on the weekly. And then on the monthly, Ethereum's hanging around right now, barely just hanging on to that 8 moving average, but it has officially flipped over the parabolic SAR red. Ethereum has not given us any mixed signals. When it flipped over the parabolic SAR in the red here, we went into a massive bearish consolidation or sell-off or bear market, at which point in time we finally flipped it over bullish here, and the entire time it was bullish. It just went full-on parabolic, and now here we flipped it over red again. So we do have our first monthly red histogram on Ethereum. We have left the bullish control zone on Ethereum, and we're about to get that 821 cross to the downside on Ethereum. So Ethereum does not look good. I mean, no crypto looks good right now. Let's be real. Doggy Dogecoin did exactly what we said. It broke down from that key support level. If it broke down from 30 cents, I said, I believe 18 cents was the target, or 16 cents or something. Oh, I think I said this wick down here. So we basically went down to that wick like almost perfectly. This is just, to me, looks like a, you know, we basically had a descending channel. We broke out from the descending channel. We topped out perfectly on the measure move. And then from the descending channel, we have basically formed a, you know, pretty clear like resistance here, which is this descending triangle. Let's put in a support so we can kind of see a little more clearly. Sometimes I forget to update these charts, or I just don't like reboot this computer so it doesn't update on its own. So you guys don't get to see like my actual up-to-date chart sometimes. But here we have basically this little triangle forming right here. And then if we do the measure move of that triangle, which is, you know, from the top of the triangle to the bottom of the triangle, the break of that triangle would take us basically from the break of that point to the measure move to the downside, which is basically where Dogecoin broke down to, almost exactly. And, you know, now it's just below all of its support that it put in for months, actually just flipping over a hard buy signal on the daily. So potentially saying that it's bottomed here, but it really needs to get above this resistance and back above that blue support line at 26 cents. But Dogecoin looking bad, man. Looks bad, man. Things are looking bad, man. I don't know about that Dogecoin, dude. dogs are not looking good, bro. The real trade's in the cats. There's nothing to see here. There's nothing to see. What can we do? Let's make this a little cleaner. Okay, there we go. So if we broke down from this level, which we did, we took out the low right here. We're getting bought up currently. But if we close this weekly, if we close the weekly below 25 cents, this thing looks really bad. And more than likely, it's coming down here to our previous support right here. Previous support right here, which is 8 cents. So 7.5, 8 cents. Looks bad, man. Hard sell on the weekly. We got the sell, buy, sell signal, which tells us like this thing on the weekly is terrible. And then a bunch of red histograms. The old Doge is looking rough, guys. It's looking rough, bros. And that's it. That's all we got. Could see some like temporary upside here. But again, it doesn't matter what Doge looks like nearly as much as for the overall direction as what Bitcoin looks like. So BNB looking fairly rough here. It did take out, no, it held on to that low right here. So we have a low right here, and then we have the same low right here, but we have a much higher low on our indicator oscillator. We have a slightly higher low on our stochastics. So again, that's bullish divergence taking place between these 2 points. Now it's hard to say that that's going to be like the bottoming point because we don't have any green histograms on the daily yet. But in the event that we do find support right here off the 200 simple moving average and get above the 200 exponential, we could expect, a powerful bullish move to the upside. It's going to be hard to get above these like resistances though. I think BNB is like probably looking at like 377 to like 430 to potentially top out. So definitely danger zone there. Definitely danger zone. And this thing has just gone absolutely parabolic. So on the weekly, it's potentially going to get the cross. We got the sell by sell signal, bunch of red histograms. This looks bad. If it closes a weekly below our previous low of 260, which is just a couple bucks below us at this point in time, it's going to look rough. It does have a couple moving averages below it, but I mean, 150 bucks, that's another 50%. It's another dip, but if you're buying the dip, you're buying it 50% cheaper. So don't dollar cost average into downtrends. This is Michael Saylor. Don't do what Michael Saylor does. He's an idiot. Chainlink, man, it's hanging on to the 528, but barely. A very clear lower low. Definitely a little divergence taking place. Not on the stochastics, but on the TJD, TDMACD. Again, we got in Chainlink at like $2, I think like 60 or something like that. So I've been out of this for a while, and I just don't see any reason to be in like any of these altcoins, especially when we get to the Bitcoin dominance chart. Here's our Bitcoin dominance chart, and it looks like it's bottomed out. We've talked about this quite a few times, so I'm going to keep it quick. But bearish control zone, hard buy, and we saw a decent continuation. Bearish control zone, hard buy. We saw a sell-off, but then decent continuation. Bearish control zone, hard buy. Little sell-off after continuation. Bearish control zone, hard buy, continuation. Little sell-off afterwards again. And then here we have bearish control zone, hard buy, little sell-off, and then I would expect continuation. And it looks like we're going to close above the 8 moving average on the weekly here. So our next target's going to be 51% Bitcoin dominance. We'll have to see. And if you base it on, bull/bear markets, like our previous low for Bitcoin dominance was 35%. So if this is the end of this bull market, Bitcoin typically will gain Bitcoin dominance throughout the bear market and lose it throughout the bull market. That will be our low and then a higher low. So, potentially we would expect us to come back up here and retest this very clear resistance here. So, potentially we could expect Bitcoin dominance to come back up to like that 72 range. And then what's that going to look like? It's going to look like a giant ascending triangle, a flat top resistance, higher lows on the bottom. We come back up, retest it. Eventually we eat through that support and Bitcoin gains back dominance if it gets the measure move out of here. So it's still too early to tell. We do have exponential and simple 200 moving averages still with the slope to the downside. We are getting that death cross here, but again, typically we've talked about death crosses multiple times. Once you get that death cross, we almost always come back up and retest that death cross. So we could get up here as high as like 57% Bitcoin dominance. So initial target is like 51, 52. Second target is like 57. So, but Bitcoin dominance is telling us that altcoins are going to get crushed very, very soon. Or Bitcoin's going to break out to the upside and altcoins are just going to go sideways. So total market cap looks absolutely horrible on the weekly. We're about to get the 821 cross. We have very clearly a bunch of red dots on our parabolic SAR. We have the sell by sell signal, bunch of red histograms. We have crossed below the slope line. We're getting ready to lose the blue slope and switch into the red slope. At which point in time, I would expect market cap to get crushed. Topped out at 2.6 trillion. We're now at 1.3 trillion. That little sell-off took us down to our target almost perfectly at 1 trillion. If we can't get back above like 1.6 trillion, I would expect us to come back down to 885 billion. And then after that, the 200 exponential moving average is 539. The simple is 432. You know, $500 billion from $2.5 trillion. So that's an 80% drawdown from the top. That's pretty much bear markets. That's crypto bear markets. So this is telling us that we're probably going into a crypto bear market. You know, that was exactly what happened back here. Let's look at our bull market or bear market from 2017. The crypto market cap sold off 87%. So, you know, what is an 87% sell off? If we did the same thing this time, it's going to be almost exactly down to our 200 exponential or simple moving average. Like 84% is the 200 simple moving average. And again, that's 432 billion. So looks rough, guys. There's not a lot of, there's almost no technicals on anything but like a daily that you could even argue are bullish right now for crypto. So anyone that is still saying bullish things about crypto right now is not using technicals at all, because I cannot find anything technically that is short, medium, or long-term bullish. If you look at really long-term bullish and you look at yearly or like, you know, 3-month or 6-month chart, maybe you could argue that there's still bullish stuff, but there's nothing bullish on the daily, weekly, or monthly charts. Coinbase tried to get a little move back up here. Still looks like we have broken out of this little descending channel and found support on the top. This held, at least for now, and we started to get a little pushback up here. But again, we still cannot get above the 8 moving average. We did flip the parabolic SAR over once, but as soon as we took it out, we basically just sold back off. We look like we're trying to take it out right here. If we can get above $233 on Coinbase, I will expect the measure move and something decent to happen right here. But realistically, if we move it to the breakout of the channel right there, that's just our first target from our entry point. So $283. Again, that's a nice move. 24% move to the upside, at which point in time, it would just look like a high, a low, a lower high, a lower low, and then again, a lower high, and then potentially a lower low. We'll have to wait and see, but bunch of green histograms in a row. Sell here, buy right afterwards. So there's potentially some upside potential. But again, it's tough to get bullish on this thing because all it's done is ever sell off. Riot tried to get that 821 cross back here, but it looks like it's just kind of chopping around here. This is that Bitcoin mining. Got the hard sell here. It's still above the slope line. It's blue, but bunch of red histograms in a row. And, you know, it's really just a high, a low, a lower high, and then you could argue this is chop, and then that's a lower low, and then this is just potentially a lower high. Even if it comes up higher, you really can't start getting bullish on Riot until it takes out like 60 or $66, which is like 100% move to the upside. So if it can break above the rest of these moving averages right here and like consolidate for a little bit, I will probably take a scalp position on Riot, but I really want to see it close above all its moving averages. So we could put a entry in here for a potential long trade. Again, I'm not looking to take it yet at this point in time, but there's definitely some potential that if we can start getting up here, that I would look for, you know, something along the line of like maybe this. I mean, that's a rough stop loss, 8.5%, but 24% to the upside. It's like 3 to 1. But again, I would have to see us like close up here above all the moving averages. And you could argue that you could take that trade off of a lower level up to the 618, and I wouldn't argue against you, which would give you like a 35% to the upside with like about a 9% to the downside. Again, nice risk reward, 3.7 to 1. But again, I would have to wait and see how that kind of develops and what it looks like. But overall, if we switch to a longer time frame, turn off our drawing tools, this looks bad. I mean, and obviously Bitcoin looks bad. We have crossed 821 to the downside. We tried to come up here and cross them back to the upside and got rejected. So if we stay below this long enough, it's just going to sell off. If we can get back above this level long enough, like $34, it will cross back to the upside and look good. We are in the bearish control zone, so the bears are in control, but maybe running out of steam? We'll have to see. We got a positive slope on the 200 exponential and simple. Looks rough still, though, for now at least. All right, let's talk about our boy, old Mikey Saylor. So yeah, we talked about this channel quite a bit. Talked about the potential that this could be having a breakout. I told you I expected it to fail. We will have to see now, though. Because look, we got back up to my red box area, exactly where I expected us to sell off from. Slightly above it, potentially breakout. And now here we just got rejected right back inside the channel. We are about to leave the bullish control zone and get the cross on the Stochs. We have multiple red histograms in a row. And let's talk about Michael Saylor and his most recent Bitcoin purchases. The dude obviously has no idea what he's doing. Based on his most recent tweet, which is how he communicates his poor decisions to the world, he bought another 13,005 Bitcoin for $489 million. So he blew his entire nut on Bitcoin already. His new nut, which is another $500 million. So at this point in time, and his average entry price was $37,600. So Bitcoin is currently at $32,600. So he's already down $5,000 per Bitcoin, which is roughly 15%. So he just lost, if he had 489 million and he lost 15% of that, he basically just lost about $75 million already in 2 days. So Michael Saylor has just lost $75 million in 2 days. That's good. That's smart. So his current total, his current total Bitcoin expenditure is $2.741 billion. So $2.7 billion he has spent on Bitcoin. And the average price total of all his Bitcoins for MicroStrategy are 26,080. So if price is currently 32,600, he is currently up roughly $6,000 per Bitcoin, which is roughly 20%. So he's still up 20% on his overall investment, which you could argue is good, but I would have to argue is terrible. Also, he's in danger zone because if we lose this level, he'll be underwater in his entire Bitcoin position, and he will go from looking like the Bitcoin Jesus that everyone is portraying him as to Bitcoin Judas. And the fact that he has spent $2.74 billion on Bitcoin, and Bitcoin's market cap is like, 700 billion at this point in time. The fact that he put in like 5% of Bitcoin's total market cap at essentially like the top basically says like, if he does ever capitulate or if Bitcoin does sell off, like it's going to get absolutely wrecked. I mean, it's just so ridiculous. Like, it's so terrible. I feel bad for anybody that bought into his most recent scheme and the whole Bitcoin bubble and everything and didn't take profits and is mortgaging their house or their business. So absolutely terrible. So while we're looking at cryptos, let's look at our stonk coins or our Reddit coins, and then we'll go into like some actual traditional analysis and commodities. So GameStop looks bad. 821 has crossed to the downside. Last time 821 crossed to the downside was a pretty aggressive sell-off. We had a couple false alarms, but we do have a high here. We have a low. We have a lower high here, and then we have a higher low, and then we have, arguably a higher high or same high. So you look at this as a flag, and there's definitely potential for a breakout and continuation to the upside. Sell by sell divergence signal, bunch of red histograms in a row, bearish control zone. The bears are in control. It looks bad. Could have potential move to the upside though. AMC looks slightly better. We're getting the buy signal at the top of the range though. I never like to see that happen. I want to see the buy happen down here below like the 40 or the 50 mark. When you typically get it at the bottom of the range, it's good. Down here is good. Down here is good. Down here is good. When you get it at the top of the range, it usually fails. Which we have also bearish divergence playing out. Maybe not. It looks rough though. Bunch of red histograms in a row. Still above the slope line, so that's good. Basically just a consolidation at the top of the range, which is usually good. Bullish reset for something. You could argue that this is a flag in the middle of a bull run, and we're likely to see continuation to the upside. So again, there's definitely potential for a massive squeeze on this thing. I don't know if it's going to happen. I'm not invested or speculating on AMC. But if you were going to speculate on one of these shit coins or stocks, AMC is probably the best one at this time. BBBY, Bed Bath and Beyond. Looks rough. It looks bad. 821's already crossed. Bearish control zone. Lost the slope. DraftKings. I'm probably going to stop looking at this one soon, or at least regularly. It barely got above the 200 exponential. Still well below 200 simple. If you're going to hang on here long enough and get above the 200 simple, it'll look decent, but it just looks like people are trying to buy the bottom on this thing. And, you know, again, this looks like a flag, but a bear flag. It has a long pole to the downside, and then it has like potentially a triangle pattern, and then eventually breaks and continues in the direction of the predominant trend, which is down. The same way that AMC might continue in the direction of the predominant trend, which is up. So I'm going to jump in chat real quick, and then we will look at our indexes, and then we'll look at commodities next. Look at dot, Tahid says. Polka dot, you want? I thought I actually had the dot chart up here. Might have got rid of it because it looks so bad. I can't remember. One sec. You said on Coinbase? Probably better to look at it on like Kraken or something, I think. I mean, it's all the same, but it'll just give us a little more history. Okay, yeah. So here's Polkadot on the day. Yeah, it has so much more history on Kraken. Man, it just looks rough, dude. It lost this very key level here at 1787. Once it broke down from there, you know, you have a couple little stops along the way. Basically where we're at now, the next stop is like $10. And then after that, you're looking at like $6.37 or something. It looks rough. We're well below the 200 exponential and simple moving averages. This failed breakout right here was like crucial. Oh, whoops. I did not mean to do that. It looks bad, man. It looks bad. But I mean, no, not necessarily worse than other cryptos. Everything looks bad right now. A bunch of red histograms in a row. You know, it is potentially putting in some bullish divergence, but not even one green histogram yet. So it's hard to call that a bottom for, you know, potential divergence. Same with the Stoch. So the 50% move from the bottom to the top is basically just below us right now. The 50% Fibonacci would be 1146. So that's potential support. After that, the 618 is $8.15, which was a substantial, like, I think that's actually where I long part of it on the way up. Man, it looks rough though. Honestly, definitely looks rough, brother. I can, I'll throw it back on here since you pay attention to it and you tune in regularly. So, and again, anytime you guys want to see something in particular, just let me know. I don't mind looking at them, no matter what it is, as long as it has some kind of like history. So, especially for you guys that are here like every stream. So, Same way with the group too. Like whenever the group is back up and running next week, anytime you want to look at anything real time or whatever, I'm more than willing to look at it. I'm also more than willing to like draw up a detailed chart for you guys and then make it the one that's shared so you can pull it up on your own computer and have like my exact chart or just draw it yourself like along with me, etc. So S&P broke out to not quite a new all-time high, but still just hanging out at the top of the range. Hard sell signal. Putting in some very clear bearish divergence. Got to be careful with these stonks, guys. These things are looking toppy. Dow Jones, bearish sell-off here. Took out that full daily candle right before it. It is down below the zero though. Looks like there could be like some potential support from this area. We'll have to see though. We did get back above, like inside of our little channel, which is good. But it looks, these things are looking wore out. The NASDAQ looked decent, got the move back up to the top of the range, tried to break out and got rejected. We got to be real careful this doesn't look like a throw over, where it just breaks out and then fails from there. We are getting the hard sell signal. We're still inside the bullish control zone, couple green histograms. So there's definitely some potential for this like measure move. These things did go sideways for a long time too. So, our measure move on that triangle is like 16,000. So there's definitely still some potential. Definitely some meat on the bone if that trade plays out. But typically these triangles will go a little longer before they break out. Typically we'll get a little closer to like mid-July. And then we'll be looking for like a breakout in one direction or the other. So got to be careful with these. I'm not going to do the long-term technical analysis because we've looked at them like a million times. Russell was weird because it got like that horrible bearish candle. Then it got a bullish engulfing. Then it gapped down and then got like a bullish engulfing of the bullish engulfing. And then it basically got rejected at like that key little slope line right here and also the 786. So, we basically like topped out, got a 786 top, came back down to the bottom, which we like essentially like have like that potential like triple bottom here. Then we came all the way up and got almost a double top. And then we sold off again to the 0.5 and then topped out at the 786. So if we don't get above the 786, I would expect us to come back down to like the 382. None of these look great. The NASDAQ probably looks the best right now. At least it's like retesting all-time highs. But the truth is, NASDAQ's going to do what interest rates are going to do. And I think interest rates are going to go up, at least short term. So I expect the NASDAQ to sell off because they're like inversely correlated. Like if interest rates go up, tech stocks are going to go down. So, but we'll have to see. ICLN, just hanging out in that range. I'll probably take an entry on this. I think I probably will take an entry on this and expect at least to move up to 25 bucks. Quick little like 10 to 15% move could look nice on this. So, starting to look good, finally. We do have the blue slope line. We're getting a hard buy. It's a little higher up than I'd like to see. I would have rather see like a little more of a consolidation, but at this point in time, I think there's definitely potential for a quick little scalp or something that turns into a position trade. XLE, energy sector, sold off pretty violently. Never quite got up to our target for the measure move. Kind of got a rejection here. This is what I mean about not liking when the buy signal's at the top of the range like that. You'll see like we got the hard buy signal right here, but that was the divergence signal. Sell, buy, sell. Oh, you guys might not be able to see because it's blocked by the sell, buy, sell right here. That's the divergence signal, and it sold off, and the buy was at the top of the range. So I don't like it, plus it's the divergence signal. And then here we got the buy at the bottom of the range, and it went down. Here we got the buy at the bottom of the range, and it went up. And then here we are getting the buy, like at the middle of the range, basically. And it was like pretty much the top. So I don't know. I don't love this. We're below the slope line. Bunch of red histograms in a row. Hard sell signal. Getting rejected at a lower high. I think energy sector. This thing has been terrible. Energy sector has been horrible. There's a fundamental case for it, but I would rather just buy oil right now, honestly. XLI. Industrial sector is not looking great. We're down inside the bearish control zone. Bunch of red histograms in a row. The divergence played out exactly like we expected. I don't see any reason to be looking to get back into this right now. I think it could definitely have a violent sell-off. And, we're basically have this giant channel. I think if this thing breaks down, it's going to break down to like 86 bucks. If it breaks up, there's some targets up here like 120. But, they're basically looking at like, you know, we're right in the middle of, you know, $20 to the downside or $20 to the upside. So, you know, might as well flip a coin. And if I'm going to flip a coin, I'm going to do it in a casino, you know, with pretty girls and free drinks. So XLF, financial sector does not look good. You know, this has recovered the least. It basically looks like it came up to close that gap from like that gap down after that massive bearish engulfing candle. Bunch of red histograms in a row. Slope line is powerfully angled to the downside. If we go the weekly on this one, I think, yeah. See, this is like the double divergence signal. Sell, buy, sell, buy, sell. Red histograms in a row. This thing looks like it's about to get wrecked. It looks like it's about to get wrecked. $31. 20% to the downside if this sells off. And it does not look like there's any steam left in the tank to keep moving up. So I think financial is about to get wrecked. XLU utilities. It's operating inside like this downward channel. Looks like it may break, but I think realistically it probably stays inside the channel. Maybe get a little pushback up, but there's no meat on the bone here. I would, if you were looking to take a position on this, or I was looking to take a position, I would just wait till it gets down to the bottom of the channel and look at it at like $62. But the truth is, this thing operates in such a tight range right now. I would just wait for an actual trend to develop. There's nothing here. Oil looks good for a continuation. I would still rather see it break back down and retest the breakout, or at least get closer to it, at which point in time I would take an entry. We definitely got to sell inside of the bullish control zone, and it looks like we're about to. No, we have just exited the bullish control zone, and looks like we got one red histogram in a row. It looks like this thing's about to take a hit. I would expect it to sell off like probably like $5 or so, at which point in time I think this trade setup will look nice. I think it's just be patient on oil. It'll be there. I mean, there's a strong argument that oil's going to like $100, $200, $300 in the next like 6 months, year, like 5 years. So I'm definitely looking for an entry on oil, but not right now. Not right now. All right, and last but not least, commodities nuts. Got him. Got him. Gold. Oh no. Peter Shaft. I talk a lot of shit about commodities, gold, silver, etc. But I am a massive long-term bull on commodities. And I definitely love gold and silver and have large positions in them. So I talk shit, but only just to talk shit. I really do love gold and silver, and honestly believe they're the only sound money. But the charts, my mind's telling me yes, but the charts are telling me no. Looks bad, man. We're back below 200 exponential and simple moving averages like we expected. We fell short of our 1950 target, and you know, I mean, I've showed you guys this a bunch of times, but let's go to the weekly real quick. Let's turn off the moving averages and let's see if gold's doing the exact same thing it's done before. I mean, if this high, low, and then like high, 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 triple top, death. High, you know, low, maybe you could argue right here, but you know, we have basically like a 1, 2, 3, like kind of a triple top ordeal going on here. So you could argue like that was our first sell-off, that was our top, that was our second sell-off, that was our top, that was our third sell-off, that was our top, and then death. You know, high, first sell-off, top, second sell-off, top, third sell-off, top, and then what comes after that? Death? I don't know. I don't know, man. And then this is what we were talking about earlier on, and I talk about all the time is when we interact with the slope line, we'll come up to it, and we'll almost always see resistance or support the first time we test it. So in this case, obviously, we were seeing very clear resistance at the slope line and then getting rejected. So got to be careful, man. It's okay to strike out, but you don't want to get rejected too often. And this is the weekly chart. If we go out to the monthly, all we've got is red histograms and a hard sell signal. The last time we did get this sell signal, and we got like the sell by sell back here, but neither one of those times, I guess here you could technically say we were inside the bullish control zone, but the last time we got a real sell signal like that was back here at the top. And then we did actually get one right before we got massive continuation. So we could get a move like this where we get continuation, but I mean, look at this little bit right here and look at this little bit right here and tell me they don't look a lot alike, with a hard sell signal, with a bunch of green histograms and a blue slope line, and then a bunch of red histograms and losing the slope, a bunch of red histograms and losing the slope. It looks like gold is about to sell off heavy. And if it does, it could get back as low as like $1,400, which for me is a massive buying opportunity. But do I think that's going to happen? Not necessarily, but it definitely could, man. I mean, gold is an inflation hedge. And let's be real here. Me and Jerome Powell are right. As far as I'm concerned, like, we might see some inflation, but it really does look transitory at this point in time. So we'll have to wait and see, man. I don't like agreeing with Jerome Powell or the Fed on anything, but silver looks like it's going to sell off. Oh, last time I wanted to take a look at the longer term silver chart, and I had the wrong one brought up here. But here is the one that goes back way further. And this is what I was talking about, the massive cup and handle. I've been talking about this for a long time. I've heard a couple people actually talking about it recently. So I'm not the only one looking at it, which is good. Oops, I did that the wrong way. Which is good. But, you know, basically looking at silver, we have a double top that goes back to like, you know, 1980 and then 2011. So, you know, that's our, what color do we want it? Maybe orange. That's our cup right there. And then typically with a cup and handle, what happens? You see a channel, a downward channel, for the handle. And then when it breaks out of that channel, you'll see like a little mini cup form. So this is kind of what I'm looking at. You know, this is very clearly like a downward channel. Don't mind all those other random lines in there. But this is very clearly a random channel. We broke out of it, retested it. That was our CVD break. And then, like, you know, we're moving up from there. So now what are we forming? Well, we're basically just forming, like, in my opinion, the handle of the cup and handle. So when we zoom way out, we have a massive cup and then we have a handle. And, like, I don't know when this handle is going to, like, you know, move out to the upside. But if we just say roughly, like, that slope line, how we have it, you know, we got some time, guys. 2025 before this thing breaks above $50. So, I mean, it could be great, but we could very easily come back down to like 13, 17, 19, $20. But long term, I am massively bullish on silver. And we've talked about like the targets to the upside. You know, we're here now. We're here now. Might as well. Oh, wait, that's the wrong one. If we did take from the bottom of the cup to the top of the cup and take our measure move from the breakout in 2025, which is a long time from now. So maybe don't go all in on silver right now, but this is not financial advice. Especially with like retarded premiums. I mean, ridiculous premiums. I forgot that's a restricted word. No offense to anyone. That's a 100% move from the breakout. So if we break out from like 43 to $50, we're looking at like $90 to $100. And if we start looking at Fibonacci extensions, like the 2.618, it's like $100. Like, you know, we can do this one too. This is my favorite Fibonacci extension, with the exception of Bitcoin. Bitcoin's my favorite Fibonacci extension. This is my second favorite Fibonacci extension. So if we take from the top at $50 to the bottom at $3.50, and then we look at my targets, which are the 1.618 and the 2.618. The 1.618 for silver is $241. And the 2.618 for silver is at $3,333. But if we do like the conservative version of that, and we just take from $50 down to our bottom at like $12 during like the CVD capitulation, which is a little more realistic probably, we can, that one is in yellow currently. That gives us our 1.618 target of 120 and our 2.618 target of $500. So you heard it here, guys. $4 million Bitcoin and $500 silver. You heard it from this guy first. I said it. But we'll see. You know, again, when's that going to happen? Probably like 2050. So your kids will be rich off all your silver. All right. And then this is the one that still has me like bearish overall on precious metals. This is the gold silver chart. We are in this very clear downward descending triangle. We have also a smaller descending triangle. We have technically broken out of our first resistance, broken out of our second resistance, and started moving to the upside. If we clear 70 silvers to 1 gold, you know, we're just going to start retesting each of these resistances. But eventually, I would expect us to get up to 81 silvers per gold. And then, you know, depending if you're going by the green measure move, the blue measure move for the 2 triangles, or our Fibonacci retrace from top to bottom, you know, we're looking at basically like 90 silvers per gold. At which point in time, eventually, and you guys know this already because I've done this quite a few times, but if we look at the monthly chart, eventually I would expect a similar situation to what happened previously, where we got a parabolic peak in 2008, where it was 90 silvers per gold, and then we sold off massively all the way down to our bottom in 2011, where it was 30 silvers per gold, and then we got our Rona peak, 128 silvers per gold, and then I would potentially expect, you know, somewhere down here as low as 35 silvers per gold. Or if we go full on biblical, we could go back to 10 silvers per gold, ladies and gentlemen, like in the La Biblioteca. Or wait, no, that's the library. Like in the Bible. XPT. Oh, I want to reset that back to a reasonable time frame. That fatty platty. You know, we got that initial bounce in between our measured move and our potential top target right here. I'd like it. I want to see what happens right here, though. I think, honestly, if gold and silver keep breaking down, I think platinum's going to break down too. And this 1, 2, 3 deal is not going to look nearly as pretty. But anywhere between like $850 to $1,000, like, I like platinum. I really think it's undervalued in relation to the other metals, not to mention in relation to like all other markets. And it's technically more of like an industrial metal for like catalytic converters. But, you know, I think this should be 1-to-1 with gold because of historical like relationship, or 1-to-1 with palladium because of like industrial usage. Platinum's actually better than palladium. Like, palladium can do what platinum does in catalytic converters in gas engines, but not in diesel engines. Platinum can do what palladium does in gas engines and also in diesel engines. And neither one of them is like more or less rare than the other. And there's like an extensive refining process. So like, there's no legitimate argument for why platinum shouldn't be equal to palladium or equal to gold. And the truth is, the reason they're probably not equal right now is palladium was so undervalued for so long that car manufacturers spent a ton of like work and money and whatnot, like, to make it so they could use palladium instead of platinum. So eventually, when platinum is like undervalued enough, or enough time goes by, I would expect those same car manufacturers to say, look, let's just like go back to using platinum because it's that much cheaper, and then platinum to like shoot up in price, or maybe palladium just shoots down in price. I don't know. But overall, key support around like the 800 to 1,000 level. So USAS looking rough, pretty much like at the point where I'm not really even interested in this for much longer. We are seeing some bullish divergence potentially, but I need to see some life out of the United American Gold and Silver Core. Aurora Cannabis. You know, it is like rebalancing time, so I'm kind of like looking around and stuff like that. But the truth is, I'm pretty much going to be adding to, depending what I'm selling rebalance wise and whatnot. I'm also have like a lot of crypto money to be deployed into other markets that are not crypto. So typically I would put them in like gold and silver, but I really think cannabis stocks are going to be like the trade of the next like 3 to 5 years. Commodities overall, but cannabis, uranium, and oil are like probably the three things that I'm like most bullish on right now. Silver and gold, obviously, too. But to me, those are more like a savings account. Tilray, same thing. Maybe potentially going to roll back over here to the upside. ACB and Tilray are my two main positions. Canopy Growth also, but most of these are inside of THCX or YOLO, which I basically look at as like worse versions, but a little more diversity. UEC, I still think uranium is like topping out. We saw quite a bit of bearish divergence. The trades are like super busy, super excited, and uranium moves slow like snail. So URA, UEC, and CCJ, Cameco, all I'm massively bullish on long term. But right now, I got to see what they do, because I really think we're going to see like continued downside or just sideways chop for like months or potentially even years. So I'm not really looking to like deploy massive capital. But for like rebalancing time, I may load up a little more on uranium just because like in my long-term portfolio, that's like stuff that I'm not really looking to like trade around, and more of like a quote-unquote investment time frame purchase. So like IRA wise, I think like uranium is like one of the best things you can have. It's not like you go out and buy like, like I don't love gold and silver in an IRA, because I would rather have physical, because there's so many more benefits to it. But like uranium, it's not like you're like, I think I'm going to go to the pawn shop and pick up some yellow cake and like put it under my bed. I mean, depending where you live, maybe pawn shops got it. I mean, you could probably get some that's like wore out. Some of that old wore out uranium, but it's not really my style. I don't want to physically take a chance on uranium. Would be kind of cool to have a piece, I guess. I don't know. I'd rather have some yellow cake I could eat than an extra eyeball. Lithium is looking decent, honestly. There's not a lot of charts that look good right now, and lithium's looking okay. It's still putting in a higher low, but it's got some strength. There's good fundamentals behind it too, like battery-wise. Nickel's another one that I like long-term. If you're looking for like that clean energy, like future batteries and technology stuff. Lobster. Oh wait, no, this is lumber, not lobster. Lumber. Sorry guys, been a long day. Lobster futures. LBS1, it's just hanging out at that same level. Again, couple green histograms in a row in the bearish control zone, getting ready to cross. We're at our target. We hit our lumber futures target perfectly. What did I say? I said 200 exponential, 200 simple, and $837 were like my three targets, and we hit all three of them. There's tons of support in this area / resistance. I think it's going to be tough for lumber to sell off anymore. And the truth is, like, obviously this is futures, but like if you go to a store and try to buy lumber right now, it's not going to be like way cheaper. It's going to take months and months and months for like real price to catch up to like the futures price. So I think it's much more realistic. Lumber just like chops around or goes up from here, then it just keeps selling off. Because like stores have to sell product based on what they paid for it. And like they probably have like tons of lumber stacked up because they were like restocking, and it was such good, like, everybody was buying it, everybody was building homes, everybody was building all kind of stuff, and then all of a sudden it's like, never mind. So they're probably gonna be stuck with it for a while. Eventually they're just gonna have to like unload it, and most of that stuff's like pressure treated, so there's not even like the risk of it like going bad. Like it's just gonna be sitting there. They're just gonna be waiting to sell it forever. Caterpillar got like that little bounce off our key fib level. It already got our measure move at this point in time. So, if you were looking to trade counter trend, 2 green histograms, bearish control zone down here, getting a little bounce, you're probably going to get like some kind of follow through back up to retest that breakdown. But, I really think, based on what happened previously with Caterpillar, like, we were in this massive wedge channel, got a nice like parabolic move out of it, and then sold off like 61% over the next. That previous top was January 2018. This bottom was March 2020. So it was like over 2 years of downward consolidation. So I don't want to be stuck in this for 2 years of downward consolidation. I think that this is like way overcrowded, and I don't know. Industrials don't look great. Besides, we don't need, if we were doing like an actual infrastructure package, there would be like a strong argument for like Caterpillar and John Deere and stuff. But like if we get an infrastructure package from the old Dems, let's be real here. It's probably going to be like childcare and like coddling services for people that need like a safe zone. So no, I'm just kidding. I don't want to get too political here, but in all reality, it's not going to be like airports and roads and bridges and stuff like that. And last but not least, let's look at Deere. Deere got a nice little bounce here. We were talking about how Deere was like much more bullish all through this whole period, and then even when it was like breaking, it was more bearish through this area, but even when it broke down, it was like much more bullish. It didn't even get the measure move of the channel, and then it's like already back to that area. We got the buy sell buy signal like coming out of the bearish control zone with a bunch of green histograms. There's an argument that this thing's going to push back up. I would expect it to push back up to a lower high though, and then when it starts looking toppy, that's when I would probably take a short on this. Or I would start looking at like selling calls or like buying puts. Somebody was asking about options and how I would trade it, assuming that eventually we'll get like the measure move or like a key Fibonacci retracement. But once we've already moved down that much, I don't like to get involved in that. I would rather wait for like the reaction rally up and then get involved with it before the next leg down. Assuming we're going to get like an A, B, C, or like a 5-wave to the downside type situation. So, but yeah, that's all I had in mind for today, guys. I hope everyone enjoyed the screen. Everybody enjoyed the stream. I'm going to jump into chat real quick, and I will cut up with anyone that's interested in cutting up for a moment, and then I'm going to call it there. Answer any questions anyone has, or comment on any comments anyone left in the comment section. Also, if you're not using the indicators, I highly recommend you go down in the description and go ahead and jump on TradingView and use them all for free. You can find them very easily. You can find my alternate TradingView account, and all of them are available for free. You can also find old and mediocre at best quality videos, which are the indicator series. There's like a playlist on my web channel on Crypto Trend Trader, and you can go on there and see how to use them. I will be updating those very soon, and they will be one of the courses that will be available for free. And then there's also going to be a basic course available for free. And then also later on some much more detailed, much more useful, much more valuable courses that I will charge $1 million for. No, they'll still be reasonable, obviously. The group is opening back up in a week. If you have not contacted me about the group and you are interested, please reach out to me. If you have contacted me about the group and I did not respond to you, I may have accidentally lost your email, as I think I responded to the last few that I hadn't responded to today. So check your inbox, and if you do not have a response from the old Crypto Trend Trader, reach out to me again, because I probably just accidentally did not hit you back, or maybe I missed it or something. So but that will be opening up next week. If you have any questions, comments, any of that good stuff, leave them. Make sure you like, make sure you subscribe. Appreciate all the positivity, guys. Definitely have the most awesome community, and do appreciate each and every one of you guys. So I'm going to jump over here and chat real quick, and then I'm going to roll out. Let's see. Let me look at that. Okay, so Bubbly says, I keep missing out on small 10 to 20% scalps on crypto. Yeah, Bubblies, and that's what the group's all about, man. The group is much more for like little scalps and stuff like that. I'm not really doing that on like the public channel, just because it's not realistic for me to like do 2 videos a week on like a scalp type situation like that, because you're not going to know half the time when I'm getting in, half the time when I'm getting out, or anything like that. But I will be posting / have posted in the past like daily slash 4 hour scalps like all the time. And there's like a separate section specifically in the group, which is just me posting like trade setups, like multiple trade setups every single day. And in all actuality too, like, you know, obviously it's not financial advice. I'm not your financial advisor. I'm not doing like a signal service or whatever. I'm just showing you like the trades that I'm taking or trades I'm potentially going to take, you know, if price action moves in that direction or whatever. But in all reality, like if you're trading anything more than like a couple $1,000 or whatever, a couple decent trade setups and you're already like way in the green. Like I think, did we look at tech today? I can't remember. I might have skipped tech. But for instance, if you took like that Bumble trade when I took it that I talked about on the channel, that thing's up like 40% right now. So if you look at Bumble and let's say you put $200 in Bumble, you're already up like $100 on it. So, you know, that's like the whole month taken care of. So, you know, all you got to do is hit one of those a month, you know, and I'm not saying you're always going to have 40% trades, but with all the markets, all the assets, like everything I look at, it's not unrealistic to think you're finding 20 to 40% trades like crazy. And if you're trading like 10% of your account on each trade or on your scalp account or whatever, it's not unrealistic to think most people are trading minimum like $2,000 to $5,000. So in all reality, man, like, you know, that's part of the whole investing in yourself thing, in my opinion. So, but yeah, anyway, like the short-term scalps and like swing trades are definitely more what the group's all about. As where like this is much more like technical analysis, you know, longer-term stuff, learning skills, and investing. As where that has like everything, short-term, mid-term, long-term, all that good stuff. So, but yeah, the 10 to 20% scalps, man, are just like, you know, that's like how you pay your bills or grow your account, like short term, and then you feel comfortable just burying something in a nice, like fundamental and technically sound investment, or just growing your account, so that you can eventually, like, one day retire from your day job or whatever. Like, I don't know your specific situation, but you know, the truth is though, you should always have multiple streams of income, and the best money is the passive money. So, in my opinion. Just got on Coinbase. Oh yeah. I think it did just get listed on Coinbase. That's how you know it's like the top, is when stuff like Doge and Dot and all that stuff is like getting listed on Coinbase. You're like, check please. Sean CZ says, tough to want to try to catch the falling knife. Yeah, for sure, man. It's tough to try to catch a knife. But, you know, if you put in a nice little risk to reward setup or whatever, and like validation, invalidation, and like, you know, probability of success, like you feel much more comfortable just taking a stab at stuff. Because you're like, if you're taking 5-to-1 risk reward trades, and you're hitting them, you know, you only got to be right like 1 out of every 5 to break even. And typically, you know, in all reality, I don't take anything less than like 2-to-1. So in all reality, man, like you can kill it on those little like quick scalps, even if it's just like, oh, I just got to earn like $100 today to pay my bills, or, you know, $50 to feed myself, or $20 to feed myself, or, you know, whatever it is, whatever your like little goal in your scalp account or swing trade account is, whatever, it's easy to just like, you know, see gains, I should say. Bubby says, yeah, that's always my fear. There's so many times it'll make a 15% average move in like a day or two at times. Yeah, and that's, Bubblies, that's an important thing about trading with the trend too, man, is like, you know, I'll take a scalp, like counter trend scalp, but I don't want to like take a trade against the trend. And you could argue right now that the daily and weekly trend on crypto is down. So the last thing I want to be doing is taking like a legit like swing trade or like investment, quote unquote, right now in like crypto. As far as like stocks, it's a different situation. You know what I mean? A lot of stocks are still in a bull market, still look good, still have nice charts. So taking like a 10 or 20% like scalp or something like that with the direction of the trend that turns into a position that, you know, over the next like couple months or year, it turns out like, you know, into something much more, is much more realistic and much more, you know, again, I would always rather just trade with the trend. It's the same as when you like, you know, if you were going to go swim in a river, like, would you rather like swim with the current, like downstream, or would you rather swim like upstream? Like, I would rather always just swim downstream. And by swim downstream, I mean sit in an inner tube with a cold one in my lap or in my hand and just float. So, but I mean, that's what trading with the trend is basically that. You know, swimming upstream is like trading against the trend, and trading with the trend is like sitting in an inner tube, you know, on a sunny day with a cooler floating next to you, drinking cold ones with a koozie, talking about how easy life is with your buddies. And that's why I like to trade with the trend. And that's why Crypto Trend Trader is the name of my account. Like, obviously, I realized that other people were more interested in like stocks and commodities and other stuff as well. But part of my goal is to get people interested in stuff too, because a lot of people that are in crypto are new to the scene. They don't have the same like interest in stonks. Although, you know, honestly, this year has kind of changed that for a lot of people because the stock market sold off so heavy because of meme stocks, all that stuff. So, you know, I'm all about it. I honestly, I don't hate meme stocks. I don't hate like short squeezes and stuff like that. I really just want to make sure that when the shit hits the fan, you don't lose all your money and then quit trading or quit investing. Because that's typically what happens with like bubble bursts and like stuff like that. And like, that's all I care about. I just don't want people to get burned and leave, because that's a lot of what happened to me in 2000. Like, you know, I didn't have nearly as much money back then, but like I got wrecked in 2000 at like the bubble burst. Like, I got wrecked. I lost like 40% of my account, like right off the rip. And then it just went sideways forever. And, you know, I was like jaded for years. And then come 2008, at least I was like ready for it. And then like, you know, in the last whatever, you know, 5-10 years really has been, you know, the difference, because that's when you're just like, oh, okay, I get it now. Hang on a minute. I'm not just going to be like that guy who sits around and like, you know, I was more of like a passive investor or like longer term trader, or I looked at like fundamentals and some technicals, or, you know, I made bad decisions. Like, you know, now I try to just take all that fog and just blow it away and just be straight with it, man. Because like, even if I love something like gold and silver, you guys know I get on here and I just talk trash about it. If it looks like trash, I'm gonna tell you how it is. And I think that's the best way to do it. I mean, for me at least. Like, and I know how my personality is and everything too. So, you know, I try to convey that to you guys as well. So. And last but not least, Sean CZ says, my little arrow's in the way, so I will never know. Oh, there's still a couple more below. Says, yeah, I had a limit order on Matic trigger yesterday at $1. Was happy to get out with 15%. Hell yeah, man. And that's what scalping's all about, dude. Put it in there at a key support or whatever, get that money and get out. You know, or to keep part of your position open and see what happens. Like, you know, but definitely take some profits along the way, as opposed to the bottom falling out. Yeah, 100%. Bubbly says, nice, bro. I'll resend my email. Oh, Bubbly's, I'm sorry if I didn't get you back, man. A lot of times I don't know who it is because I see like real names instead of YouTube names. So if I did not respond to you, definitely send me a new email and I will get back to you, brother, because I would be glad to have you in the group, as you are a regular attendee, always have positivity, and I can tell you are eager to learn. Plus, who doesn't like Bubblies? The old bubbly champagne. One day we'll be popping bottles together, ladies and lady bros and bro bros. So, but I think that's it for tonight, guys. Appreciate everybody tuning in. Hope y'all enjoyed the stream today. Yeah, and with that, God bless you all. Take care of yourselves. Take care of your families. Most importantly, take care of yourself and make that money and invest in yourself, man. Like, you know, there's always going to be things that you could better spend your money on, but there's never anything better than investing in yourself. Because you see like those rewards over time. So I think that's why education is so crucial to me, and why I think it's so important. Like, there's so many amazing books you can buy for like $10 or $15 that will literally change like the game for you, how you think about investing, how you think about trading, just like the level of knowledge you can get. Like, I remember like college, we were buying like textbooks for like $200 and something and didn't learn a damn thing. Like, I have no idea why you don't learn, like why they don't have you buy like these little $15, you know, 100 or 200 page books, read them and learn exponentially more information. So, and like I took, like my major was like business, finance, marketing, sales, all that junk. I like double majored, and I did not learn like nearly as much in college as I learned on my own once I had like a passion to learn, or like through real world, like running a business, owning a business, investing, trading, accounting, all that stuff. So I think that honestly, like a lot of that structured stuff is just straight garbage. If you find something you enjoy and a way that you learn and a topic that you enjoy, you can invest less money and exponentially make more money. And the fact that you guys are like here, though, what are we, 2 hours and 49 minutes into a video, and you guys are tuned in like a couple times a week, like the same names, same people are commenting. You guys are invested in these markets. You're paying attention. You're like every video, I think every one of you can argue that you have learned at least one thing every video, if not 5 or 10 or 20. So think about now how much you've learned from not just me, but like the markets in general and trading and investing over the last year or 5 years or 10 years or 20 years. And, if you have the same passion, you put in the same work, you invest like, in your actual education, in books, in courses, in, trade groups, in all this stuff, like you're going to make exponentially more money in the long term, like for yourself. You make exponentially better decisions. Like, I have a lot of knowledge to share. I try not to share like tax advice because that's like, kind of shady. But as far as like trading and investing and like giving my opinion on stuff, like running multiple successful businesses, like I have no problem answering any questions anyone has about anything. But it is important that you guys remember, it is not financial advice. I'm not your financial advisor. These markets are extremely volatile. So please do your own research. Trade responsibly. Bubblies, I will look for your email specifically and get back to you. Appreciate everybody that responded and is interested in the group. Look forward to meeting you all in person, trading with you, getting to know you, and making that money. Popping champagne bottles in the chat. Thanks to you as well, my man. God bless everyone. Have a good evening, a wonderful week, and I will see you on Sunday after the weekend. And yeah, I think you will all be pleasantly surprised as well, as I have been working on a bunch of things behind the scenes. So we'll have a nice little warm welcome into the trade group a week from now, and a bunch of cool and useful stuff going on. And then we got the first course will be coming out soon as well, and free for the community, for everyone. And then there'll be some extra special awesome perks for the trade group as well. So Lisa T, oh man, all this time I always talk about guys and I never talk about girls. And of course, Lisa T comes in the chat. So of course, thank you, Lisa. Glad to have you in the community. I'm not sure how long you've been creeping, but very glad to have you. And I will start addressing men and women now that I have a confirmed woman on the channel as well. So everybody have a good evening, guys, girls, and everything in between, outside and all around. And I will see you guys on Sunday. I will see you people on Sunday. Crypto Trend Trader, and I'm out of here.